All right, Andrew, I'm going to get on stream, okay? All right. No. Nope. Let's see here. Good morning. Well, we had a bad indicator yesterday, and it has been followed through on. Strange how one day can change a lot of things. I'm a bit perplexed by it. Gotta be honest. Yes and no. I think there's a mixed bag here when you look at signals like that. Because on the one hand, it had already been kind of esteemed as probable when we were watching that chart on Wednesday during that pump, and it looked to me like there was a pump that kind of left behind that level from March 4th. So if you do follow on the Discord group, I was talking about like, okay, IWM's level on March 4th is like 204 or thereabouts. It's like 203 to 204. It's this area. It's really probably better described as 203, but I keep saying like 204 because I'm looking at the support level that was dropped later, and it's a little bit higher. It kind of like mixes the two right here. But I mean, it's basically 203. You also have this, oof, that was loud. Tesla maybe breaking out, if that's the case. You also have this downward creek here. Now I made it bold and white on small caps so that you could see it. This is the Russell 2000 right there. And that was another one that we kind of tapped and then like moved on. So there was just a lot of mixed signals here. When we were pumping, obviously I was pretty excited that we pumped. You know, I made some money on that trade to the upside, but there was a feeling of like uncertainty when it pushed over the top, and then really it was all pre-market. I mean, there wasn't almost anything particularly negative in regular trading hours, because in regular trading hours we had we talked about it. There was consolidation right here, higher lows. I mean, no, it's not good to like wick above and then close below. That's typically like the rule of thumb. But to sort of like ship it and say, oh, it's definitely going to go down or something would have been, I don't know, like a bit of a stretch in my opinion. I'm going to move over this thing. I'm just trying to get it up for now so I can get this link posted in case people want to watch. So it's a strange kind of thing to watch the market go from looking really bullish to kind of flipping on its head. And I think a lot of it's just volatility. I don't necessarily even think it's completely done shaking out by any means. If we're thinking about momentum here, then we have to kind of consider that, because shaking out could take a little bit of time. It was a widening. You can see that pretty clearly. Like there's a increase in the spread beginning on the 14th, going all the way up to here. So it's about 7 days. And then again, I would have expected if it had pushed over that top, and it did, right at like 207.30, that it did push over that top, that then it would it'd be probable that it would come back, because this is an M cross, right? Like 1, 2. It'd be probable that it could come back down all the way, and I was looking backwards at where that might be over here. I got a lot of weird little like bars and stuff on here that are kind of making it hard to see. Well, whenever I turn on extended trading hours, it always looks different because of the extra bars. It looks like really noisy, noisier than usual. It's just, for me, it's like that's a lot of noise. So, yeah, I had marked off this level too, kind of haphazardly. I looked at it and I said, that's a extended hours gap, which is a pretty unusual thing. I mean, usually, well, I wouldn't say it's unusual. It's pretty normal nowadays, but I would say that it's um, noteworthy. That's the right word. Because normally your institutions, if they're trading at full liquidity, aren't going to leave gaps like that. So I feel that like oh, these guys totally like took it the wrong way. Looking at the GME thread. To the top of the range. So yeah, if GME were to go from 28 to 50 now, I don't know, but I guess that's just a complicated question. I think GME is gonna. I do think it's gonna squeeze this year. That's the answer that people are asking more about because they're just kind of considering those things. Sure. Yeah, charge point. Could go all the way up to $2 later. I did a chart on that yesterday. I posted a lot of charts yesterday um, because I was trying to kind of keep up with everything. So this has been a kind of a crappy month for me. Yes, first month of the year was awesome. Second month, not as good. This month, pretty terrible. Just full transparency. It's not really a laughing matter, but um, yeah, mostly just this market downturn. I mean, I would like to say it caught me unaware. I kind of saw some of the writing on the wall, and I didn't overplace like every hand. It was really just a couple that like just didn't time it right. It's that simple, you know. Anytime you kind of come out and say, hey, this is where I am, this is what happened, you're always at risk of giving your critics ammunition, but I'm just being honest. It was a great first month and a half this year. I had excellent trades, felt really good about it. I don't know, it was like the way the market turned down was just, it was like such a strange, I guess because it was news driven, you know. And when it's something like that happens and it's just a kind of out of your hands, it's probably best to just like, frankly, like smart money did, just pull your money out of the market and just sit on the sidelines. As soon as things started getting like tumultuous with this whole tariff situation, that probably would have been the wise choice. Just get out. So you can trade momentum either way and make money on it. I did it a couple days here and there. I did really well, but a couple days is not going to it's kind of overshadowed by a month of down if you weren't well positioned for like puts, 2 months of down, whatever it's been. So I'm feeling like kind of mixed about this whole thing right here because what the title is today is a small cap death cross. So I didn't post about it yesterday. I wasn't really looking at it till the end of the day and saw some headlines pop up. So I was like, oh crap, you know. So the 50-day and the 200 daily moving averages are crossing up. The last time this happened was 2023, I think. It was right before the final bottom. So, I mean, if there's one kind of ounce of encouragement here, it's that there really wasn't another major drop. It seems like the death cross would, because what it typically signifies is that it's not just a short-term downtrend. It's like turning into a longer-term downtrend. It took like 3 months to recover in 2023 afterwards, but it didn't actually make like significantly new lows. The market was already like oversold at that time, as you would expect, and then it drops again. It makes new lows. It would be like us coming down to like, I don't know, 192 or 194 or something like that. Like that would be the comparable, I suppose, levels here in terms of like a new down. But it made like a new down low, and then it broke out. And again, it took a few months, and it would be, again, it's like what we've been talking about. It's basically like March is up. This is weak. You know, this is not a great upside. I had mentioned that, and I kind of, again, it's really my fault. I mean, if you look at the things that I said on stream versus like what I had charted, we knew that there was like a weakness here because it was getting overbought like too quickly. There was clear indication after that pump at FOMC that, I don't know, man. The very next morning, it dropped down, it punched through a creek, and it's like, all right, well, it lost support. So all that happened yesterday was they brought it back up. You can't really see it on extended hours, but in regular trading hours, it's like punched below pretty clearly, like it punched below the trend, and then it comes back up. So yesterday was just a big giant like head fake, basically. I mean, if you want to call it that, you could call it that. I think head fake's probably not the right word. I think the first one may have been more of a head fake. Second one's really just distribution, where it just brought back up to sell off again. So I figured that was probably going to happen, and I even said it yesterday, like, man, that doesn't look good. It's a kind of a weakness. It'd have to get back over 207 and hold, and it did not. So again, I didn't stream yesterday, but I was, talking about it in the Discord group, and there's just all kinds of little things here that like they just add up. You should never ignore. Just don't ignore your own like TA about stuff. I mean, that's all there is to it. So at this point, in extended trading hours, IWM looks like it's on the creek, right? In regular trading hours, I'm going to get rid of this one. It's not really helpful right now. In regular trading hours, it does not. It looks like it would come potentially much, much lower, like all the way down to 200 again. And so, man, I had puts and everything too, unbelievably. It's hard to imagine I was prepared, and then I dumped those puts yesterday when it dropped early morning, and I probably should have just held on because I knew, like, again, that was an SOW. So it's looking like 200 is likely here, and I don't know. If you ask if are we going to recover from that, I'm not sure. It's possible. It's also possible that, like anything else, that this is a little weak. The one thing I was really looking at that I really wanted to see happen was an advancement here, and it did happen. But afterwards, you don't want to go make new lows, so we need to hold. This is a rejection on the 30-minute moving average, and then that death cross really happened very end of the day. I mean, it was kind of happening during the day, but just based on where we closed. And I was saying like that peculiar level that I marked off where that middle of the gap was ended up being like you can see that it was pinned right beneath it, end of day, just stuck right there. Like absolutely no mercy from sellers. I think a lot of this has to do with option selling as well, because max pain this week was low. It was like when we were up here at 207, it was down to like 205, 204, something like that. So like we've been riding above it all week. So I think just knowing where those levels are, I think the sellers took it down, and that's it. I mean, I don't know if it's going to be a nail in the coffin moment. Technically, again, if you go back and you look at 2023, the last time the small cap had a death cross, it didn't break down right away. It just chopped again for about a week or two, and then it dropped for about 2 months. It went down for like a month, and then it took them another month to recover. So it wasn't like an immediate, like, oh no, it happened, and then all of a sudden the market tanked. It was very close to it, but it wasn't like right on it. So lots of problems here. We had weakness coming up. I mean, I don't know, man. We never got overbought. It's not like on the higher time frames, you can see pretty clearly, like we didn't come up to the levels I thought we would. There's no there's no secret there. Like it just kind of didn't make it, right? And the idea was that we would probably pump until near April 2nd. But if we take a downturn a week early and we don't recover right here and bounce up and do like a final move to the upside, I think it's possible that it's just kind of done for now. Now, one of the things that I had thought, and I'm going to go back again to things I said, not necessarily was on the chart here, but one of the things I had said that kind of crossed my mind is that when you have these distributive pumps that are going to reverse and come back down, sometimes if there's a target in mind, like in this case, I think 208 and 214 are really critical targets. Like it's just retracements. It's not even like a big deal. I know that this could be a cat ear. I get that. But I'm also thinking like, I mean, just getting to the 0.5 is 214. It's not that big of a retracement. If you're bearish, a 0.5 retrace is an opportunity to like load back up, right? It's typically the way that it works. So I don't, looking at this is like the lowest possible retracement. I'm not particularly like, again, I'm not saying like one thing or the other per se. I'm just saying like there's a precedence here that like this just didn't go very high, period. And when you look at the big picture, it's like, no, there could still be a last pop that's on weakness. And I mentioned that previously that like we may get an extension up to the upside that's actually on like a weak move. Like it looks bad already. And then it just for some, not for some reason, but it essentially just extends to get to those targets, and then it reverses pretty hard. With a death cross, it doesn't make you feel like that's going to happen. But, we've seen this kind of thing previously. Like this is what happened back here as well. You got a last sell down for liquidity, kind of got overextended early, and then it builds back down. It looks kind of weak. It does eventually have a push up, but it's a big distribution, right? And it's mostly sideways action. So could we see something like that going into April 1st as opposed to like way up? Sure. If this comes down and there is weakness here, you could still get a pump that comes up to 208, and maybe even again does go up pretty far. I don't know if it's going to get all the way to 214, but I mean, it's definitely a possibility that we take like a shallow road and get there and kind of go more sideways and up as opposed to just straight up, big boom. I think that's going to be probably an easier path for shorts. They don't have to worry as much about momentum. And if the death cross is kind of already there, and they can kind of knock it down today and hold it there, then even if there's a rebound, it's probably not going to cross back up and over. It might kind of mess with it a little, but at this point, I doubt it would change it. So, anyways, so I would definitely be on the lookout for, again, possible continuation back up, even though this is bad, but doing so on great weakness. And then that's when I think we finally get like the bigger drop down. And then, yeah, I'm less confident that we get to 214 at this point. But we'll see. I think 208 still seems pretty likely to me. Maybe 211. And then I think that would be it. To just kind of a last gasp. So this right here looks like a 1. And then I think we're going to still see that this is like a middle. And then we're going to get a like a 1-2, and then we're going to get a 3-4. I think 3-4 is going to be where you're going to get serious weakness in the market. And then I think we're going to nosedive. And I had said before I thought we'd probably come down to like 194, but who knows? It could be way lower than that. So GME, AMC kind of did what was expected. I mean, this is pretty one-to-one with what I was expecting. As soon as we went up, I drew this marker because I was like, if it does come down, it's probably going to look like a head and shoulder, and then it'll come all the way back down and hit this creek. This is actually quite positive. So we wanted to see this jump over. It did make an advancement, just like IWM, over that top. This is a pretty easy to read chart right here. So if you're having trouble with that IWM, you're like squinting at it because it's messy. This is basically the same thing, although we were hoping, and I was hoping that this would come back to 296 and bounce and go up. So it made a slight advancement over the 310, very, very, very slight. Like it's within a penny. All right, it just knows that it wicked up a couple times over it. It failed to advance. You can see that. Momentum kind of crashes it back down, takes it the other way. When we come back down, I don't necessarily like the idea of coming to 296 on the principle that, it's potentially lower than where this broke out earlier because technically it took off from like 297. But if you go back to March 4th, that would be a really important level to check. And I don't think there's any problem with us coming back down to check it. Now, from this point forward, you do need to see it break this creek, consolidate and then advance. And I think my idea was that this would probably be like a Friday $3 kind of deal. I'd be surprised if it ran today. I mean, the weird thing about IWM here, and it is kind of unfortunate, right, was that when you looked at that cross section, it really looked like it would hit today. But we've seen before that sometimes those pivot points, if it breaks the channel, and this did, that's all there is to it. There was an upward channel, so it didn't hold the channel. Okay, that's important. If you look at those, that wave pattern that I drew out, and like where we thought that might be, actually I think I deleted that. Whatever, it's gone. I don't know where it is. It was right here, but it's not here anymore. That had to do with this channel. If the channel breaks, you can't use that anymore. There's no measurement there. So the wave itself had to kind of hold here and then go up again, and then it would have intersected. But that pivot often remains important. I'm not even seeing it on here, so I don't know where it went. But it could be, again, that's a low pivot. So like we're looking at today as a potentially low marker. And then I still think Monday could be potentially green into next week. Seems a little ridiculous, I know, given we're talking about like death, but I'm just saying it's what I'm seeing on the chart would indicate that this could still rebound and go up, even if it's on weakness. So for AMC, we want to see the same thing. Like we want to see it jump the creek, but I'm hesitant to say that it does that today. I think there's enough space here and enough time to try to chop that you could have a big nothing day. I mean, it's always cool if something big happens, and you get a big day, but on a Friday would be awesome, but it's a Friday. So do I think that, again, the option sellers are going to want it to run a 350 as opposed to 3, or, Even 315, I don't think 315 and 350 look attractive to them because they've been making a ton of money on downside lately across the market. So, and selling those contracts to people and watching them expire and stuff like that. And it's frustrating, if you're on the other end of it, but that's how a lot of people make money in the market. So, when you look at it from that point of view, I just don't know how I could justify it running today. Again, do I think that there was a pretty clear pivot potential for Friday today? Yeah, but we might just see it as a low. And I think that death cross on IWM sent a really big bearish signal to the market. And that close here beneath 205, which is that middle support, is just going to get knocked down. I'm curious again about that run up. I am still thinking that might happen. But so does AMC look particularly good or bad here right now? It looks okay. Like, what happened here is very simple. It made a small advancement. All right. It's minuscule. I got to just trust that these wicks are correct and that it actually did push up higher. It looks like the same value. It says 310 on the chart, but the wicks technically come higher. So I'm going to say that, if you were on like a penny chart, that you'd see that actually came higher. Okay. It is a little bit of a distributive action right here, but there's not like a huge high volume top. It's just pushing up above resistance. Now this would just be a backup to a creek. You can see it right there, and also a backup to a support. So naturally, we've talked about this plenty of times. If you have a rebound here, and then that rebound can manage to push against the resistance and come back down and land, it should be okay. Yeah, but Booksy, it didn't go up above 315. No, it didn't. But, one step at a time, right? If the first advancement here can get above that level, and I'm just kind of doodling it off to the side, which is what we see. This is essentially like the middle of a cat ear. 1, 2, and then 3, 4. It's a cross, right, of a creek right there. All right, that second advancement ends up greatly defining supply. Like, where is the supply at? And so when we look at that, that's the first step. So does this look particularly bearish or bullish? It's kind of in the middle, and that's okay. Right now, it has a potential to go up and test again, and that's important. And if it had not come up high enough, and then especially if it didn't make a new high here and then it broke low, I'd be a lot more bearish right this second. I'd be having to say, like, yeah, it looks pretty bad. This is normally how we slump down. To me, this looks like it's making paces to jump creeks. Like, this is the creek right here coming down. I'll change it. It's yellow. I'm going to change it to like blue or something. Okay, it's following that EMA down on the 30-minute chart that we're looking at. And this is fine. I mean, it jumped it back here on probably the 18th. It looks like crossed up and then came down on it. And so as long as this holds, we're good. Well, what if it goes down for that lower gap? If it goes for the lower gap, which isn't impossible, but if it did go for the lower gap, at this point, I don't think it's going to, but I could be wrong. If it did go for the lower gap down there at 287, is it bearish? It could be. But the problem with that is that when we've had, like, if you go back to like I'm saying, we've seen it before. That's what I'm trying to say. When we have these kind of double dips, they're not always bad. So they can be, but I know it's like, that's not really helpful. It really just depends on like the shapes. Like right now, this looks okay. This is very rounded. I'm not seeing high volume on the top. I'm seeing like kind of high volume on these like lower ends near 296, which is positive so far. If the top were more like a U and we were getting these kind of like up thrusts right here, like we did on this side, right? Then I'd be a lot more negative about coming down again, potentially. But that's not really the case. We're getting kind of a rounded top with pretty low volume on the top and decent or more decent volume like near the bottoms, which tells me that there's more buyers at this point right now than probably sellers. So liquidity wise, it seems like we're doing okay. So is it possible to have like a double dip below like a floor level that's been established? Sure, it's possible. We did it in like the March spring before that big run up in 2022. It was minor, but we did it. Like we went down, we came back up, and then we actually broke down again, like here. We did something like this, and then we advanced. That would have been like a comparable visual, so to speak. I'm just trying to show you like what it would maybe look like in this particular instance. So, you know, it does happen, and there is a Wyckoff like double spring, like a double dip spring kind of idea, but I don't know. It gets a little bit complicated because at the end of the day, what you'd find in Wyckoff is that you still have to analyze the volume. You'd still have to analyze like the bigger picture here, and like, so it's like, well, it just becomes a. If you're just saying, oh, it's going to double spring, well, you can't really know that, you know. That's what I'm trying to say. So it's one of those ambiguous ones. A spring is fine. A spring is like a dip with a retest. That's what this looks like right now. Dip, advancement, it jumped a creek. Did it jump a creek? Yes, it jumped a creek. Jumped this blue creek. Retest, then it's good. So far, so good. That's what I would be saying right now. If it dropped again, then you have to jump the creek again. And then you still have to see the retest again at 296. It just kind of resets everything, and then you're just kind of going back to looking at volume anyways. So do I think they could go for the gap below? Yeah, maybe. I don't know why you need to, though. I mean, my particular stance on this with my TA is that it's going to come up, you know, at highest, it's going to get to like 420 or something. At lowest, I think it probably does get to 360s, this region right here. So either way, like I think it's going to get back up to this near this top. And then probably at that point, it's going to capitulate anyways and come back down. So what usually happens on AMC when we see this kind of stuff is that we don't even bother checking this creek. And I don't know why we do that, but we just don't. And I think it's just, again, one of those institutional things where they just don't care. They don't leave that liquidity haphazardly. They just kind of leave it because they're going to come back to it later. And so it would not at all surprise me to see like a gap up all of a sudden to like 316 and then just ride up to wherever we're going to go. And then you've got a gap, and then they come back down to get to the creek later. And the creek intersects probably near this low. I mean, that's typically the way it is. So that you would come back down over here probably mid-April. It would make sense. So do I think we need to get the gap fill? No. What if we got it and then we took off? Would it be better? Maybe. But at this point, guys, I mean, I'm trying not to be like overly bearish here, but at this point, if this is between the ears, and I think it is, then this is already weakness. The fact that this came lower, that's already done. So it's almost like it's almost irrelevant to me, you know, at this point. I think there's a clear and evident weakness here on this drop down. Yeah, you're like, well, it's just a spring, right? No, not quite. It's not quite that simple. It's a localized spring action. It's not a big picture spring action. Localized, it, again, takes you back near the top, probably, at best, right? And that, I think we've said at worst, there's other possibilities here. I used this one a couple times. There's like a wave center. It's actually higher up. It's like right there. And that wave center does kind of give me, you know, the heebie-jeebies because it does look like it only comes in like 370. I definitely think that's possible. What bothers me about that is it never gets to that creek, and I don't know why you wouldn't. Does it come high enough? You know, maybe. That wave would be essentially complete no matter what as soon as it hits like 370. So there's this extension zone of like possibility based on other things, and we've kind of talked through that previously. And I had like hotspots and stuff. I posted a chart about that. There's like 3 hotspots here, but anyways, you get what I'm saying? I don't feel like at this point there's any kind of comfort necessarily to be had in this particular bottom, aside from like a short-term run-up. So we're looking at this as a possible pump, which is great, but then I still think it doesn't really matter. It's probably going to come back down. And at this point, again, it's already been sort of laid out. So I would not be surprised if we drop down to 270s by, a month from now. So I'm just looking at this as, all right, we're going to head up. We may have a few places it could stop. Then we're going to head back down. Man, IWM is just getting crushed today. So it is going down, I think, to 200. Man, that's a bummer. That's right where my put was. Volume's really low. It's a weird sell-off. It looks super low volume. Ugh. Gross. Let's talk about GME. So apparently I got people's attention yesterday. I didn't say it like in order to do that. No, we're not going to wait till winter. Probably be May. We're talking about summer. Last year in April, it was below LSX. It was a year ago. It went to 240s. You're looking at 250s. So it was about 1 year. Yeah, so GME made... no, I'm not of the opinion it's going to be winter. I think we're going to see it before August. I think August is a 2-year mark for the breakdown, and I think it's a 2-year cycle. It's playing out in the same... It's not playing out 1-to-1. That's not important. It's playing out OBV-wise and otherwise very much like a 2-year cycle would, and just the way that it did in 2021. So I don't think it's a overly complicated situation here. There's all kinds of possibilities. When we look at, and this irritates people, I get it. They just want the bottom line. Just tell me where it's going to go. Tell me exactly where it's going to go, when it's going to get there. Okay, well, let me just go ask my genie, It's like, look, man, I love it. I think it's awesome. And it does a really good job sometimes of giving you generalized kind of answers. It really does. And I already talked about it. Like in October, I said that by March, we would be down by the gap. By earnings, we would be by the gap. And then by March, we'd be popping up a little bit. And then there'd be a reset in positions. And you're probably going to have a lot of people that dump AMC during that reset period. It's probably what's going to happen. Okay. And then April and May, I think you're going to set up and you're going to go. But that is a generalized idea, right? When you get to more specifics of like how you get there, that's where things get so crazy, The how you get there is a big, big deal to people because, if GME takes a route that's low, a localized spring option here does not go that far down. It only goes down to like $18. Okay, well, going down to $18 and then rocketing up to like 200 doesn't sound that bad to a lot of people. But the bigger picture is more complicated. There's a massive wave down here. And I'm not taking this lightly. I don't think this is like a maybe kind of thing, in my opinion. Like, it's definitely a probability. Like, it's just not like, oh, it's here, but let's just ignore it kind of thing. Like, for me, that's not it. It's legit. This wave down happens, and I've seen it happen on stocks where they do a big creek cross and they don't check it, which is what happened here on GME. And then later you kind of build outward sideways on a cat ear and then you dump. And people are like, well, that's never going to happen. It's never going to go down that low. And it's like, dude, just look at the 50-50 here from the top and tell me that I'm wrong. The middle here is like $20 and 30 cents or something. I mean, that's right where we're kind of dancing around right now in terms of like where those low were here. You can see it. It's like right where we broke out. Could that be the center mark of a massive distribution? Absolutely. Could this thing be going all the way down to 650? Yeah, it could. Now, the way this times out, you're like, well, that doesn't look like a May run. I know. But this is where things get, again, confusing. It's like, look, man, that is on the chart. I don't think it's impossible. I don't care what you think about GME, whether you think it's going to be more resilient or not resilient. I'm totally with you on that. This is probably one of the most resilient stocks like ever in terms of squeeze plays, right? I'm with you on that. Nobody would disagree that GME is probably the strongest. Definitely the strongest. Okay. So do I think that, people don't let it get down there, won't let it get down there? I don't know what's happening right here underlying. I could say that it's very likely that there's been a huge amount of setup in order to take it down. When you go up in a distribution, you're going up to kind of load up on positions to the downside. Okay? Holding above 24 here is very critical. Like, we barely are holding it. We're punching through it already. 24 is a key level here, right? I would say that 2030 is a key level here. Losing those levels should not come as I know there's a bunch of junk on the chart. You can't see it, but I'm talking about the levels. So losing those levels should not be brushed aside. Like that it's suddenly like, oh, it's fine though. It's GME. It's super strong. It's not going to. No. When we looked at this originally, and I'm talking about like 2 or 3 months ago, there was a long-term kind of idea that this was iterating a pump and then a dump and then a pump and then a dump and then a pump and then a dump kind of thing. All right. When you get down to it, the middle of a cat ear, which is what we're talking about right here, it can go either way. And I don't like this idea that it can't. And I think that I'm not picking on Stockfather at all. The guy is really smart, and obviously I've learned a lot from him. And you hear me say it all the time. But one of the things I disagree with is his use of the cat ear, that I call it, because he always talks about it in terms of distribution. He's not wrong that the distributive action looks like a cat ear. But one thing that we don't agree on is that the cat ear is always bearish, the way that I've defined it. Well, what gives you the right to define it? Because I made it up. It's just a goofy joke. That gives me the right to define it. Because the way I define it is not Wyckoff distribution. I define it as a moment of iterative consistency, like where there's an iteration playing out in a range. And I think that whenever we talk about it, we always have to keep in mind that, like, yeah, it's possible that this is just the normal cat ear that distributes. And in order to see that happen, you have weakness here. Usually it's like a new low. Usually there's like a clear upthrust in the beginning on the first ear. You do get the iterative motion in between the ears right here. I'm like pointing to it on the screen. I'm just kind of showing you a demo, so on and so forth. But guys, we've talked about it so many times at this point. I know you're getting sick of hearing it, but there can be strength here in between the cat ears that develop into a cross up and over. And the fact is that while some would define the cat ear as always distributive, I do not, because I see it as the exact same pattern that plays out from an iteration standpoint. The same exact pattern that played out in 2021 that dropped us is the same pattern that played out in early 2021 that pumped us. They're no different. The only difference is that one has a weakness in the middle of the ears, the other does not, and then the one that does not have the weakness actually breaks up and jumps the creek. This is very simple. It's very, very simple. And there's volume kind of indications that can tell you that, but I think both of them are cat ears. And then to make matters even more confusing for people, there can actually be no weakness at all and then have a spring action, because technically, like, if you look at a Wyckoff accumulation model, you can see the same thing. Like, there could be a massive rise with a sell-off that turns in. This is what happened, in our case in 2021 when it broke out, where there was like this, right? That's the cat ear, and then it breaks up on the final M cross. This is like the last 1, 2, 3, 4. It crosses up and over. And so does that happen in an accumulation, a cat ear? Yeah, because that's a reaccumulation right there. Remove the beginning part, and you can see it pretty clearly, like it's in the motion of the M cross here. There's jumpings of creeks, et cetera, et cetera, et cetera. There's also some breaking down. I mean, there's an ice level there in 2021 where you kind of pump against it and then you break back above it. So it's really hard for me to just say, hey, look at this pattern. It's definitely going to go down. It's different than saying, like, look, let's read between the lines here and let's see what we can see. So there's a complication in the nature of this, in that I know that what I'm saying sounds like complete polar opposites. I get it. But the difference for me is very subtle, and it's not that dramatic. It just makes the end result very different. The difference, right, is really what happens right now. Because if we cross up and over 28 right now, there's a good chance we're going to pump up to near 40. And then what happens at 40 could determine the rest of this entire schematic. If the cat ear has a tendency to break up and then flush back down, then that tells us that this breakup will probably be followed by a flush back down. It's not that complicated, like an ear 1, ear 2 setup. Okay? There can be a pump there and still dump back down. That bothers the crap out of people because they want you to just pick a route. Okay, so it can go up or it can go down. Ha ha ha. I'll just flip a coin. Okay, well, good. You do that. I'll actually watch this chart and just, make a determination based on like volume and what's going on with certain levels. Okay. You can flip a coin if you want to flip a coin. I'm going to do my best to kind of keep an eye on it, right? And continually use TA as it progresses, because it's a progressive art, right? It has to be. It has to be continually like monitored. Hence what we're talking about on IWM right now with like a death cross and other stuff. Like, it kind of came out of, it was happening, but it wasn't like, it didn't have to happen, but it did. We don't know, well, we don't know. So here's the thing, right? On GME, that's all my rant is going to be about there. So on GME, there's a high probability right now that we're entering like a final iterative phase of this small term cat ear. I think this has been iterating down. I talked about that previously right here. There's been a lot of iteration down. I think on the whole, what then I look for is that this is like the first cross up over, right? And then we're doing the second one right now. It looks weak to me, and I was saying this about the market on the whole, right? It's kind of a weak cross up. It hasn't really made huge advances during this. That's not always a positive. But sometimes RSI goes first, and it takes a minute, and then the stock follows through, and it looks a little weak, but it still follows through. This to me is a cross up and over right here. So 1, 2, and then 3, 4, it's crossing up. The waves don't just stop there. If it stopped at 4, then this would just dump down, and that would be the end of it. Sorry. Cat went crazy. In 2021, when AMC went down for its spring, GME kind of followed the broader market in that regard. It had already gone low, and it was going up. So one of the things I was looking at was like, what would be a difference between a cross up and a cross down here? A cross up, and then we're just going to get right to it now, okay? The cross up should be A pump up past 28, probably. I don't think we want to stop at 28, but ultimately it's not going to be like a double top here. We got to be careful. If we hit like 29 or 30 and then drop down and immediately make a new low, being like breakout of the so-called trend, whatever it ends up being, okay? And we're kind of developing one right now. That's not always a positive. That's a SOW. That would be an early signal that there could be weakness, okay? If it holds the trend, early signal there could be strength. That increases your odds one way or the other, okay? It's not a flip of the coin. When you look at the big picture, what you don't want is you don't want to see distributive action along this kind of vein that runs down from 28 to 27, period. If you see distributive action along there going into April, there's a good chance that it's going to sell right back down and that this cat ear will follow through. There is a downward arc that terminates around 1750. Why would we come back to 1750? Because that's where we took off from, basically. Right? We took off from this 17 area. It was really like right here, down here, like 1590. But when it backed up, it came to 1680. And then when it came all the way back down and pushed low, it pushed to 1785. So I'm saying like this is likely the zone that we're coming right back to if it doesn't hold here. I don't really find it much of a question. If when that happens and it starts dropping down, if the stock holds up a little better than expected, then we still have to watch and wait and see if it can come back up over this particular creek, the one that was just tested and lost. It's if-then statements. So there's still no, you can see right here, I've got kind of building back out. There's still no guarantee that it's going to run from there. But wood coming down below that previous floor, could that, I should say, not would it, but could that indicate spring-like action? Sure. Does this kind of line up with what we see as a May run? Potentially, yes. Well, you've got this other one that kind of pumps up high and then drops low. Right. That's just a double flush. That's just liquidity up, liquidity down. That's like coming up, meeting the top, and then trying to get down low. Same deal. You just got to wait and see if it holds it or not. This is kind of complicated, yeah, but it also is pretty simple. Because if this is a cat ear, then the next step is always, 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 always. Guys, this is where we drop the ball. I got to be honest. This is where we, in terms of, I'll include myself in the YouTuber crowd, okay? This is where we drop the ball when we look back at 2021. I was like brand spanking new back then. I think the first video I ever posted was like November of that year, okay? This is where we drop the ball. This is where the greater TA didn't ever even come into play. The second cat ear is so important. And when it went up that year in 2021, AMC specifically is what I'm talking about, and it looked like it could potentially break out again, and everyone was screaming, it's a wedge, it's a wedge, it's a wedge. That's the very moment that it did not, and it went to a distributive model, and it had already gone down low and like kind of shown its teeth that it was going to probably distribute. I'm telling you right now that I think GME technically has that same signal right now. Okay, so I'm not going to, beat around the bush here and like pretend like this is somehow the most uber strong chart ever. There is a problem already, which is that this initial trend right here did punch through it. It is already done a liquidity test on that trend. It happened on the 13th of March. It wasn't like a year ago, guys. It was like not even a week ago. I mean, it was like a week ago, I guess, because it was on Thursday. This just happened. It lost that trend for just a moment and then pushed back up. Oh, that doesn't matter. It made a higher low. It didn't come through this creek, yada, yada, yada. Guys, I don't give a crap. When you see stuff like that and a trend doesn't hold, you need to mark it off. Do not ignore it. Do not ignore it. Otherwise, you're going to be like Booksy with his IWM calls that I only got out of half of them, and I ignored that silly SOW yesterday, and then it dumps the next day, right? It goes up to distribute. Do not ignore it. When this goes up, it is absolutely like danger zone when it hits this top area. If it can get to 28, which I think it will, I think it's going to get to 28, 29 at least. It's going to be danger zone. Even if it pumps higher, even if it goes all the way up to 30, it doesn't matter. Be aware that it did push below that upper trend. This is exactly what happened in 2021 on AMC, and then it went up into like what looked like a breakout mode, and it never broke out. And before you knew it, it slid back down beneath this trend. It hooked, and then it was over. Like it was dunsies. It went into a long-term distribution. Do not ignore it, okay? That's all I'm going to say. Did this happen already? Yes. Do I think that that's an SOW? Yeah, I think it is. Potentially. No, it's a higher, I understand it's a higher low. I get it. I'm not an idiot. I can read the chart. I'm telling you though, that's a weakness. It indicates that there is probably a desire to come back down beneath 24 later. Maybe that's as low as we're going to go as 18. I don't know. Okay. But on the big picture, and this is what I'm trying to get at, on the big picture, this easily reads as just like a gigantic cat ear. So if we don't spring at 17 and we end up getting stuck for some reason, we do have a June run, and then for whatever reason, it just doesn't go anywhere. Be careful, because the next run setup is probably not until, like somebody else said, like winter. I think it's a much later one. And this is not anything particularly noteworthy. I mean, if this were a small chart and we saw this, probably wouldn't think a second about it. We'd be like, sure, that could happen. I mean, be honest. If you saw a chart like this and it was like a tiny chart, you tell me that you don't think it could come back down, I think it'd be ridiculous. You know, if you had like a narrowing right here, right, and then it broke out, and then it forms a cat ear. Yeah. You saw that. You tell me that you think it can possibly come back down to check this creek, even though it didn't test it on the way out. I think you're crazy. Especially if you had some indication that there was actually supports right there that would potentially need to be retested. No, I don't know. I don't feel like anybody would look at that and think that could not, you know, and you're looking at the measurement like, oh, it actually looks like it measures right down to the creek. You know, you'd be insane to think that it couldn't do that. Oh, yeah, but this was a wedge breakout. It's a bullish breakout. Yeah, sure, but it already hit the bullish target. We addressed that like day one. It hit the bull target. It went 62%. I mean, it did. It did in extended hours, but it did it. It was a textbook wedge breakout. That 62% breakout already happened. It's just one of those things where it's like, look, man, it's either going to find support here right away, in which case it's really bullish, right? You're going to get this kind of bull breakout on this is what we're talking about right now, essentially, on the cat ear, right, roughly. And it's going to bull break and then go again. You know, maybe it happens slowly at first and then it just takes off at some point after an SOS. That's what we're thinking. If this is going to run in in June on the upward trend, kind of like it did in 2020 into 2021. That's how it could happen going into June, sure. But it has to kind of cross up a lot of different stuff, right? And that's what I was saying, like 50 is the key level here. There's a lot of parallels that you can see break out right there at that 50 mark. I mean, it's essentially re-grabbing 45 to 50 here. I think solidifies quite a bit potentially for us. So that walk up would be absolutely critical if it's going to go out, but it has to first cross up this like 28, 29 area. Simple, right? If not, look at the channel that's already been created here. It's right back down at the bottom. That's the 50-50 from this top. That's the creek from this side. Like everything about it is just right there. It's just right there, you know? It's not complicated. If bears went out, it doesn't matter really what happens here. It could pump up a little bit, but if it fails to kind of make that advancement and SOS and push and squeeze, then it's going to come back down, and then you're at high risk of, not right now. You're at high risk of capitulation, okay? So like anybody looking at this would suggest that's definitely a possibility, in my opinion. And I think I'm saying in my opinion, but then I'm saying anybody looking at it. I'm saying that that's very likely. There's also two other possibilities here, right? So those are like the bullish possibilities, right? Okay, it just goes up, crosses up and over, takes off. Forget the backup. We don't need that. We have enough, ammunition. We're going to keep moving forward. We've already traded it. I don't know why you'd say that right now because GME didn't trade it very much, barely traded that. But you could say that. The other option is that this is a much larger cat ear, which is a little bit more confusing, I think, for some folks because it's like, well, wait a minute. What do you mean? Well, technically, like this could be an M1, M2 setup where you do see a high distribution. This is kind of unusual, but it does happen. And that's just a massive creek cross within a big pullback happens later. And it does come back up to near 50, but it distributes. How many times have we seen that? Quite a bit. AMC likes to do this. It does. This is my big concern right now because I'm worried this would be like a trap for people, right? And we did this kind of SOW where we punched below. And it's like, oh, it may be easy for us if we saw it come up and it stopped short. We would be all like, okay, it stopped short and then it drops back down. It just looks like the remainder of a cat ear or whatever. That's typical. That's more typical, I should say. When it does the massive upthrust, it's really confusing because it looks like it's going to go and then it doesn't. Like I said, AMC does this. It likes to do this one. It's done it frequently on the smaller scale. We don't see a lot of this on the big picture, but frequently on the smaller scale, you've seen this U shape all over the place on the chart. I can go look and probably identify like 2 or 3 right off the bat, This is very typical for AMC. Not as typical for GME, perhaps, but don't be caught unawares. So this particular setup would be probably like a bearish setup. Again, same thing, but you're now going down. What's particularly concerning right now about this idea is that when you look at the big picture, that is what we see. Like there is a trend here that was built, and you can see that it's pointing towards that bottom. It's the generated gap that was created is still pointing towards like $6. Again, do I think that is inevitable? Probably not. But do I think that that's being played at by bears? Yes. Do I think bears want that? Yes. Without a doubt. That's what they're going for. But why? ¿Por qué? Look, I could give you like my theory, but I think a lot of it has to do with coming back to these original levels. This is kind of hard to see on this chart the way I have it positioned, but this is actually pretty early on. I'll show you. Hold on. If you go back here and you look at where that is, you can see that's like a liquidity center from way back. And again, it's like, well, that's too far, Booksy. It shouldn't go down that far. I mean, I've seen evidence that this could come down to like 450. And I'm saying 631 based on a lot of other things. But that idea that it's too far, I don't know if I buy into that. I don't know if I buy into that. And we're talking about iterations here. Like, this is the preliminary. It's kind of both. It's like an early support that's built out before the big run up in January, but it's also like early supplies where supply is trying to stop it from advancing. And that would be going back to that particular region, right? It is a very important level for that reason. This is really where it broke out, if you think about it, right here around 631. Because I was trying to figure out, like, why 631? It's a weird number. It's a silly number. No, you can see it. It is the anchor here. I mean, it took off in April 2013 from that point. You can see the build out. You can see the drop right here in 2016 or 2015 all the way to 2017. I mean, it is a weird number, but it's there. And then ultimately, this is where we had this big, giant, explosive move for GME. That's the aim for bears, period, I mean, in my opinion. So one of the things that's bothersome right now is that we are seeing evidence that indeed these are trajectory-wise going towards the same point. And that's problematic in my book because I'm like, well, that just tells you there's some kind of a definite target in mind. And the fact that it lays into everything else so perfectly is just part of it. It's just there. Okay? So is it possible then, Booksy, to have a May-June run-up that doesn't actually go all the way to the top? The answer is yeah. Because if the market takes it up, even if we get we could get a localized spring here and then take it up to the top. That's something that, again, you're probably thinking to yourself, this doesn't make any sense. You can't have both, you know. Why would you think it could go up and then back down? Well, I don't actually have it on the chart. But remember that let's just put it this way, okay? Think about this in terms of iteration, patterns unfolding. Think about what this pattern would do. Maybe it goes up now, maybe it goes up in June. But think about what this pattern would do if it went to the upside and it retested near these tops, right? And then it dropped all the way back down. You're probably like, man, that's kind of ridiculous looking. I know. It looks crazy. I get it. We don't need to kind of beat down that horse. I get it. But imagine if that were the case, right? That it does have some kind of a minor drop. It dips below, but then it rockets up, and then it dumps. Well, consider the reality of like the flush here. And then consider what that means on the big picture for like a similar motion of like you finish the cat ear and then you pump back to near the top, right? That would be us coming all the way back up to like 100 or something. Does that mean you're not going to go up all the way? I'm not going to get into that right this second, but I would say that right now the upper range is still high. So either way, it's like, okay, you go to 6 and then you go to like 100 or something like that. If that were the iteration. That's the same iteration. It's just on a bigger scale. So, you know, it may seem like ridiculous to like say something like that happens, but it's really the same thing. It sounds bizarre. I know it does, but it is the same thing. And even more so if this for whatever reason came up to like 60 in June and then dumped all the way back down, you'd be like, what? Look, man, I'm just saying from an iteration standpoint, that's the same as us doing this on the next level up. Seems ridiculous? Sure. But I don't find it to be like, it's not so ridiculous that it couldn't be possible, you know? So I'm like, okay, there's a flush possibility of like a massive shakeout, like a huge widening almost at the end of this. And that has happened, again, on smaller scales for AMC. I wouldn't say on the largest scale possible, but it has happened, where you get this widening at the end. That's pretty massive. So this, for me, doesn't stand out as particularly unusual. This seems pretty straightforward. And then the final one is probably the easiest, which is that during this breakdown, you know, you get a cat ear here on the side. It doesn't go very far, and it just goes down. And really what this is and what this would represent is it wouldn't just go straight down. There would be like a hook here, right? and then it would go down. What this represents is essentially like the simplest interpretation of a cat ear. This is the most basic, which is you have distributive action after a sell down. It's being brought back up to sell off. So it does jump the creek, but it doesn't test the creek. Instead, it just kind of continually pushes up, and it sells at the top here. Secondary sell level, basically, which is what we're seeing. It's kind of like matching previous sell levels. And then it drops down. It forms an LSPY, which I call like the hook, which typically drops beneath the ice, which is that rising trend. This is what we see in a distributive phase. Again, all over the place in the market. And then you drop down low. And you're left wondering, like, well, what happened? But you come back and look at the big picture, and you'll probably see some things that make sense. Like this will be like a 50-50, usually. Like this is like a halfway point. You'll say that first one was actually distributive. You'll come back and look in retrospect and say, well, that was just a massive upthrust that then initiated a huge sell-off period. And then there's a middle, and yada, yada, yada. And you have an S curve that goes down. And then you'll say, oh, it came back to test the creek. We didn't check it on the way out. Well, you can identify that kind of stuff early on. And that's part of the reason why this kind of stuff may seem really obnoxious and even it's kind of scary, but it's like, just ask the question, like, did we make sufficient checks when this broke out? Well, no. Do we have to make sufficient checks? Maybe not. I don't know. Could this be like a giant SOS, right, after coming through? Yeah. In which case, do you need to have a backup all the way into the range? Maybe not. But did we make a check on this creek coming out? No, we did not. What about the previous one? Well, there's not much one there. Arguably, perhaps maybe that's the $6 area. I don't know. I mean, I'm not even going to try to draw that. It doesn't look right to me, but that doesn't look right. But yeah, I mean, arguably, did we make a check on any of those? Maybe the top one, I think we did that here. We actually punched below it in this dip in April. So, yeah, we did. I think the punch below, again, could indicate that we want to try to go lower, but instead they took it up to sell off. There shouldn't be any surprise that the operators in this chart probably want this thing to come down. I've heard a lot of people say, well, they've got $4 billion in cash on hand or something. I'm like, yeah, they do, but they're in a world of ever-changing business models. I mean, you still have a lot here that's to prove, I should say. I don't think it's a simple, like, they're good. They got $4 billion, they're good. Like, From a financial standpoint, in terms of like analysis on GME, it's pretty easy to still make a bear case that it's overvalued. I don't think it's that hard to do. And like hedge funds are going to look at this as a massive opportunity to like get in on a huge long-term downward position, right? So I'm looking at it like, all right, maybe it's different than GME, or maybe it's different than AMC. Maybe it doesn't have to come down to this bottom again. But if it does, then we're really just looking at a build out into a January run up again. And this is true. Somebody said something about December. That for GME, if the pump here doesn't work out, if we don't get some kind of a secondary run sooner than later, then I don't think it's going to be a very pretty year. We're talking about probably waiting for a while. The reason for that is that these two ends terminate at different points. The low terminates here in like October 2025. The high terminates in March 2026, which is very familiar to us because we've been talking about February 2026 for a while. Right now, it's absolutely riding that wave, but it will break if it's distributive and head towards the other. That's the big blue wave right here. Right now, it's riding it. If you're wondering about like how do I build these, I did a long thing about it, but it's essentially just a quarter system, and it's correct. I'm pretty sure it's correct in terms of like directional movement here. So if it goes up, yada, 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 so on and so forth. Well, could it be some combination of these things? You've got half a dozen scenarios here. They all kind of make sense if you walk through it piece by piece. But what if you're wrong and, there is just a June run and that's it? Well, I thought about that a little bit too, because in order to get to a June run, I think what makes the most sense, to me anyways, is to do it building off of 50. So I said I think 50 is key if we go back up to 50. I think it's the most important level. It's the most significant. There is a place in this kind of a setup for that to happen from a lower position though. And I have it on here, but I don't really have it highlighted or anything. And that's, again, more to do with a local spring. If we were to go back and hit that 1739 area, actually it looks like a gap, doesn't it? What's that closing value? Ooh, 1746. That's very close. That's probably what's in view then on the weekly. That weekly gap. If we were to go back down to that weekly gap value and we were to hit that around May or so, would I be bullish on GME? Yeah. For a May-June run, yes. Absolutely. So if we round out here and then drop down going into May, I'm going to be bullish on it regardless of how high it goes. But the path forward in order to not hook, you can see I have one line here that's just a hook. Again, this is not meant to be perfectly timed out, all right? Don't look at it like, you have it coming down here. Well, it's close. I think the bigger picture is timed out as perfectly as I can get it. This kind of stuff, take it or leave it, or in terms of timing. But I think you're looking at May 14th through May 28th, that kind of region, okay? The last 2 weeks of May. If it were to build back out, what would need to happen is that you would drop down, you'd probably hit 1746, and then you would have a pretty massive move to the upside, and you'd end up back up here above 24. And I sort of have this wrong because I think it would actually be right here. It would end up being above the ice level that we've dropped, and just around that this creek, the one that we rejected off for cat ears, okay? So if that were to happen, I'm not particularly concerned until we get up to that 25 area. And then I'd be okay, we got to watch out. So you still got a pretty good chance at that June spot to get that bullish move. And what that represents, I think, is a localized spring action that doesn't ultimately want to take the liquidity all the way down to 6 or even back to the floor at 10, but that really just has enough strength to continue on. And that's just one of those options that we looked at where you could have a localized spring as opposed to anything else. So bare bones, let's kind of just break it one more time very simply, because I talked for a long time about this. 28 key level. Breaks 28, we can look at 40 and then 50. If it doesn't break 28, and honestly, you still got to be careful of 30, 32, because that's a previous top here. So just obvious supply levels, okay? You're going to be watching those. But my big ones are 35 to 40 right here, and then 45 to 50 right here, okay? Those are my two spots that I'd be watching if it broke. If it doesn't break or it has a head fake and it starts capitulating into April, I'm not thinking it's just going to rebound and go up or something. I'm doubtful that it holds going into May. I think it's very likely it's going to sell all the way back down to 17, highly likely. Then we'll talk about June run potential, because June's going to be one of two things in my book on GME. If we're down low, June is either going to be either going to be a hook, in which case it's still going to come all the way back up to 24. That's where it's going to be, more than likely, because that's the critical level, right, for the most part. Between 21.30 and 24 right there. It'll be in that spot that the fate of GME is determined. If it goes, it's going to break above, and it's just going to go. And at that point, there's no questioning what happens next. You should see a pretty massive move, at least up to 50. Now, when we get to that point, if we squeeze up to 50s, that's where we're going to be like, okay, what now? Because in the event that it gets up there, this is where the rubber meets the road. You could get a really nasty widening. So again, 50 will be key. It's just a watch out zone. Holds 50, I think it's going to go all the way up to the top, 120 up to 200. And then potentially, yeah, way out here, I think we're likely going to hit 350. It's just numbers to me. You know, I understand like those are really high numbers. I get it. But I'm also just kind of like, this is what the chart says, period, you know. So could you get up there? Yeah. That's technically where that trend is. If it does the same thing it did last time, it probably hit it early and then drop back down to like 60s and then consolidate around the top and then maybe try again 6 months later or something. You know, long-term distribution up there, depending on how you look at it. Do I think it has to go that high? No. I mean, this blue line does represent a potential stopping point. You know, we could stop as low as like 200 if it went up, and that's what I was saying. Like maybe if you're talking about the low end on this kind of a pump motion, certainly you could make an argument that it only goes up to like 180 or something and then slumps pretty hard back down to like 65 and then way later goes up to like 300, you know. Because again, it's not, for me, it's not really about the numbers as it is just where that is on the chart. If this could have been completely different numbers, I would still be calling the same numbers. So I'm just going to take it for what it is. Okay. That's a possibility if it breaks that 50 mark and just has the continuous run. It's kind of like, it is kind of like the difference between AMC and GME though, because whereas GME in this time period never really has that second major pullback and doesn't consolidate like AMC did. Remember from the June run up, this was January. It just kind of went up, it broke out and just went. This is the squeeze time right here. It was just like constant, like good news for GME, right? That it was just going to keep going, and then boom, it just explodes. But then, you know, we all know this, right? That June run up, that second run up in June, it's a big move. Don't get me wrong. It's a pretty huge move for GME if you look at percentages, but it's never pushing all-time highs again. And that is an interesting point to note. And so, you know, I've kind of got it on here like, oh, it could go up and then go up again, but there's really no way to know like how this follows through exactly. I mean, when we see it from that point of view, it's like, well, that wave actually extends beyond, but then it just kind of comes back to rest. And if we already starting like a new downward wave here, technically it could hit that target way early and then break down in March. I've caught it coming back up, but there's no way to know. Like this could easily be like a breakdown period here in March. And it never goes back up again because it already hit it. That was different in AMC. AMC had that push up halfway, chops, and then push up again. Very different. So it would have been like GME only going up to, I don't know, 25 here, and then pushing up again to hit the top at 120 or something like that. You know what I mean? In terms of the numbers now. So I don't know. That's a question mark too in my head. I'm like, well, just because it happened one way last time doesn't mean it has to happen the same way this time. Could be completely different. Regardless, that's where we are. So once again, you're back to 50. So this scenario, you do drop down, you hit 1746, and then you pump to 50. And then again, it's kind of like switching rails on a track. And I don't know. You know, at this point, it may seem obvious that it would just keep going in June because that's what happened last time on GME. It just went. It just kept going. It just chops up and then breaks out. It doesn't have any kind of massive retracements. But I am curious if we do see some kind of shenanigans here. And it would be interesting to see it do something like this after that. I think that would throw an amazing wrench into the whole thing. To have like a terminal shakeout after 50, come all the way back down to 6, and then rock it up. And like I said, it may seem ridiculous, but in reality, that's actually the same iterative motion. Because if you look carefully, you'll see that this came down back to the floor, makes a liquidity dive, right, to the floor of this pump. Remember, this hits a low here at like 1887 or something like that. Let me make sure I got that right. 1877. And then it comes up again. You see that? And it breaks out at 20. And then this would be like, oh, we're diving and then rocketing up to the top. Diving through that liquid rocket up to the top. It's actually the same thing on the big picture. It's like diving through the bottom and then rocketing up through the top. So don't get discouraged just because, you know, oh, it's going down. If you think that happens, Booksy, it's going to be horrible. No, I don't think so. I don't. I actually think it makes sense because if you've got, and there were a lot of people who were very bearish on GME, outspokenly so, people who are jumping in at 50 after a pump in June, it would not surprise me to see it rocket back down really low and then boom, explode. I'm actually kind of excited about that idea. I mean, it sounds horrible in some ways because it's like, well, I'd rather just buy and then hold and let it go up, or, you know, have an options contract and just let it go up. I don't want to have to worry about these weird middle points. Well, nobody does, right? Nobody wants to have to deal with that. It's always easier when there's no like shakeouts. But if you know that that's a possibility, then the trade here would be absolutely phenomenal. I mean, it could be probably like a end of life. It could be like a life-altering kind of trade. On the one hand, a pump from 50 up to 200, it's like a 700% move. Sure, one fell swoop, you're going to have amazing returns. But on the other hand, you kind of get like a double whammy here. And I find that to be equally as positive. Now, I'm not saying anybody should be shorting it or whatever, but even just puts, you know, you're talking about massive returns, potentially. You guys are like, well, puts add to selling pressure too. I know, but this is like a 2,000% move as opposed to just like a 700% pump here or something like that. I mean, it's huge. Huge, huge, huge. So in some ways, it seems worse, you know, to like suggest something like that happens. But in other ways, I'm like, it's kind of better. It just depends on how you trade it. I don't want to say I'm looking forward to that because that sounds really bad. I'm not saying that per se, but I do think it's possible that we get a pump in June that hits like 50, comes down to like 6, which is crazy low. Crazy low. And then has like a massive, massive drive up. And if it goes all the way top to bottom, which seems unlikely, but it's actually like the same, it's basically like the same move. This is like a 5,000% move, which is absurd. But if you look back here at this September 20th move to the top, that's a 5,000% move. It's actually the same move. I think I measured it out. And this should, again, maybe provide some comfort for people who are like, what? I'm pretty sure I measured this out, and I'm pretty sure this is like the exact same move. Yeah. So if you're wondering like, well, why would it go to 6? Blah, 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 blah. There's a number of liquidity reasons we could get into with this, the way this is set up. But ultimately, like, it's the same move that was made in 2020. That should be pretty exciting if you're somebody like that missed the boat the first time. It's a rotation. Pretty cool. For earnings, are you going to make a trade? I think it's going up. I don't know if I'm going to make a trade. I told you guys, I'm just full transparency trying to be honest with you guys about the wins and losses. I had a great first month and a half of the year. Second month and a half have been just horrible. And have not posted almost any wins. I had a few, like intraday wins. I did a lot of trading that one day, got a lot of wins on that day. And then I did pretty well over at FOMC this past Wednesday. But otherwise, it's been mostly just losses. I mean, it's just is what it is. I think that GME earnings is tricky, but I think that we're going to see a pump. As I don't think we're there yet. I think we're going up to 28. Another one that I'm trading, which is probably controversial, is Tesla. I think Tesla, and I'm not going to go too crazy on this. I'm still in a FANG trade, but the FANG trade is like dead. I don't know what's wrong with it. It's just dead. So I can't really speak much more about it right now. That's one that I'm still in, that I'm pretty bullish on. I'm in a small IWM trade for upside still. I had a downside trade that I traded out too early. FANG should be heading up towards 168 if it can hold here. It's a widening breakout. It's not a good options trade. I can't tell you what to do, but be very careful if you decide to trade options on FANG, because it's a high liquidity stock, but the options are not high liquid. They're poor. And I think part of the reason is because it's probably an institution heavy stock. Institutions actually don't trade as much options, and retail loves to trade them, but institutions trade them pretty sparingly, and they do it mostly to protect their other positions, like their share positions. So they'll do stuff like, creating a spread in order to kind of stop the market from going too far or whatever, when they need to kind of intervene. I'm not saying they don't trade for profit. I'm just saying that this particular one, I'm finding that the options chain is really dry, which is unfortunate. And I'm pretty upset by it because, in theory, like going from 140, if this had been like SPY or IWM, going from like 140 to 158, hands down would lead to gain. If you had an options contract that ended on March 28th that was upside, you would be winning. I am not, and I don't know what to say about it. There's nothing I can say. I got an options contract. It's done nothing but go up, but nobody's trading it. So when there's no liquidity, you're just SOL. So be really careful with this one. In theory, should this be going up to 168? Yeah. I think in theory, yes, it should. Is it going to get there on strength? Probably not. I think it's like everything else. I think we're going to see a little bit of a downturn and then probably have a kind of a rocket moment on some news or something. I don't know. I think it'll turn up, but I think it's going to go there on relative weakness, and then it's going to probably die off, just like everything else. This is a one that I have a lot of gripes about for other reasons, because I think it's the least bullish stock, or the least bearish stock that I found this year. I'm like, there's just no reason to be continually going down here, but it's also at a point of potential turn. And then if it makes a new low, it's going to be coming down to like 125, 130 probably. So we'll see. If it goes up, it should be up at like the 200s level anyway. That's where it's priced at. So anywho, that's the only other live kind of trade I've got right this second. And then I got Tesla calls back here near this bottom. I think what we're experiencing is, and I've exaggerated, I guess, this is just a simple like M cross right here. And it looks janky, but if you look at the big picture, they're pretty straightforward. And Tesla has had some severely bad news. And I know that you guys have your own opinions politically, individually. I'm not here to tell you what to think, okay, about the CEO or whoever, all right? I'm not here to tell you that. I'm just doing TA, okay? When this came down, I'm on the 30-minute. Let's go to like the 4-hour or something. It's been wildly oversold for a long time. And on the extended trading hours, it's building out what we would call a bullish divergence. Now, this is not a strong bullish divergence. It's like just a regular bullish divergence. Okay, what it means is that it's basically like triple bottomed here on RSI, and the price has been coming down. But more like recently, if you look at where that divergence is, it started at 300 and it builds all the way up to where we are now. And that divergence has been actually quite bullish divergence, like strong bullish divergence, where the trend has actually come up. If you look at the RSI, for example, here, you'll see that the underlying moving average for RSI has been doing nothing but going up while we've been coming down. What's of note here, and this is what I find to be technically very attractive, is that this is a S-curve down, and that divergence happens on the first ear down. So I'm going to tell you why I think this is a pretty decent setup here, because that first drop down is like the first 50% down, right? And what we see usually is that when we leave, after we break the final outer creek, that ends up being the build out over here. Now, I've already marked it off on the chart. Maybe a little hard to see that because I'm like zoomed out here. This looks good. I marked it off on the chart already. That takes you up to 281. Now, that is a technically attractive level to me because it is... it's the same place that it started. Like this is where the drop down happens. This is where the breakout happens. And you can see that that is equal parts away from 281. 281 also happens to be like a 50% retracement on the bigger picture. So this is a very, very technically solid, like it's like right there in the middle. So let me repeat that. The drop down value from the previous range and the breakout value, if you make it the same, both go back to the same point, which is a halfway point, which is a 50% retracement on an S-curve. That tells me that there's been a technically strong, and there's bullish divergence, which tells me since that point, which is a very technically strong case for coming back to that level. Even more so, if you look at where that divergence actually starts here on the low, and there's two spots. I mean, you could pick either one. But if I use regular trading hours, I think I marked it off over here at 300. That 341 cent mark is actually the 618 for this retracement. So you have two levels at the 0.5 and the 618 on this sell down here. You have bullish divergence. You have a massively oversold stock here that's mostly selling off on political fear, although yes, they did miss some targets. The revisions for these have been kind of across the board, crazy, wild, different. I'm not a long-term Tesla trader. I get in and out every now and then on a trade on Tesla, and that's it. I know that some people trade this thing pretty religiously, like they go in and out of this thing like constantly, and they're like Tesla gurus, right? I'm not claiming to be that, but we'll say this. When I look at the analyst targets for Tesla, they have drastically deviated from what they used to be. But it's weird to see how some people have like lowered the target, but they're not lowering it like abysmal amounts. And then other people took that target and they lowered it like ridiculous amounts. So it tells me there's a lot of market uncertainty about the price. And usually when that happens and people don't know where it's going to go in the future, like I'm talking about wildly different changes. So everybody's kind of changing their targets, but some people are dropping it like $100. Some people are dropping it like in half. I mean, they're cutting their targets like in half. It's crazy. A lot of times we do tend to go back towards middles. And right now on the big picture, there were a lot of gaps and levels left around 300 up to 400. And that's really like the center mark here. When I look at the big picture, I'm like, all right, there's also an ice because this is a M cross. So again, big picture wise, this is a 1, 2. There's a wave up, wave up. It is a widening, probably. Widening spread, which would make me think that this could have come back down to 150 at some point in the future or thereabouts. It's possible. Maybe not 150, maybe more like 170. This is where the widening starts right here, like at 180. I think long term, we could be going back to 180. But that makes sense because there's a long-term trend there as well. And there's a creek intersection there as well. So it's like there's all kinds of stuff that might lead you back to that end. This long-term trend coming back down here to like 182 or whatever even in May this year would be perfect because you'd be right back to where the widening started. That's a checkbox. You'd on this bigger wave, you'd be coming back down. So from a technical standpoint, are we already going that way? Yes, that's where the trend leads us. 180s seem very likely in the future, but until that happens, you also have this uncertainty of like targets, you have uncertainty of the market, and there's another ice level to the upside here. It looks kind of off. There we go. I'm going to make sure it's right. That goes right through the center of the S-curve that we just talked about, right here. So that S-curve walked down 50-50 through that ice level. The reaction to the 618, which would take you to 297, comes right up to the ice. The reaction to the 0.5 or the 0.5 reaction, which only goes to like 280, does not get there, but does technically hit the middle of that S-curve. All right. Either would be sufficient, I think, as a back test. So I think it's almost like a gravitational force right now. Like, I don't think this is very likely not going to get there. Even if it comes up here and begrudgingly, right? So to me, this is like a really simple trade. It's nearly 20% to 280. It's 25, almost 30%, I guess you could say, to 300. Do I think it's going to get there? Yeah. What's the triangulations? Well, the triangulations are roughly around the end of March into April. Does that make sense? Sure. Because of the April tariff announcement. Yesterday I looked at this. This was almost all red on regular trading hours. It's looking like it's building back out and up. But I knew that it didn't matter to me. I was like, it doesn't make any difference. The setup has not just one or two things. It's got like half a dozen things that would suggest to me that this needs to come back up and test this level before it continues. That doesn't mean without a shadow of a doubt there couldn't be another low before it does that. It could technically drop down again to like 211 and then come up. I mean, who cares, right? At this point, because I don't think it matters. If there's a flush, there's a flush. Technically, this could be like a spring setup right here to drive the price down and then come back up. But either way, I'm like, I don't really care. So what I'm looking at, I just don't. I'm like, it doesn't matter to me. It's going to come back up. Like, I'm almost positive. And those are the confidence levels that I want to have when I make trades. Like, I don't want to be scared of everything. I want to have a good feel for it. This is a dangerous zone right where it's at. It's got to get back above here. It's trying to close beneath 240. Really needs to get back and close above like 245. This is the sticky area. I mentioned it in the Discord just to kind of explain this. First of all, it's the top of the range. That's easy. So the local range. Second of all, there's a gap zone back here in a similar region around the 250s. This little area, there's like multiple gaps, but it's a strange pocket because it gapped up into it and it gapped up out of it. So if you go back and you look at this little zone, I'm calling it like a sticky region because it was previously like a distribution zone. They had to distribute it off of it twice. When it finally broke out, it really just kind of barely entered it and exited it. I mean, it was like a very, very quick overall. I mean, obviously it took like a week or so, but overall it's a very fast interaction with this zone. And there's a lot of gaps in it. And I was looking at where we were and I was like, when you take the creeks from previous all-time high way over here, and this is in 2023, and there's more if you go back, not all-time high, I'm sorry. Well, this does go back to all-time high, but that's obviously way earlier than that. Way over here. Sorry, guys. November 2021. That's the same marker. We actually are in this little zone. So there's these pink lines that are like Pepto-Bismol color on my chart. That is that's the same zone that we're currently in. And we actually hit the bottom of it and we're coursing between these two triangles here, which are essentially like creek resistant levels. So I think that getting above that is going to be a bit of a sticky situation. As I was saying, like I find it to be very, very likely that it's going to make this retracement and pop up. I don't know how it's going to interact with this little zone right here. And because it's like got multiple evidences that this could be a weird zone for us, just keep in mind that the place between about 244 and 250, $252.50. That is, again, like a sticky area. But I think once it gets above that, it's probably just going to like melt up through these levels. So maybe they'll go for a liquidity dive if they can't get in here. I think there's a lot of people shorting Tesla right now, probably. So they may want to drive the price down first in like a spring action, and just kind of dip low. It also might make sense to do that to generate what's called an SOW. Because what happened recently is that Tesla went up and made a higher low, and so it looks like it's going to rebound, right? Well, that's kind of obvious. Well, sure. I mean, that's what I'm saying. I think it looks kind of obvious. What would benefit them going down is liquidity, but also, again, maybe creating like an SOW for a later target. Like we want to try to get down lower. And we didn't fill the gap here, by the way, at 213. So that's why I've got it going to like possibly hit 213. I know it's far away. And you're like, well, that's really far from 240. I know. But if the long-term game here might be to, hey, let's get down here by May, it's certainly a possibility that there's some kind of a massive dump and pump moment. So am I waiting for that to happen? I'm personally like, I don't know, man. Like I said, I had a crappy month. It's not been a good month for my bottom line. I think a lot of people who are in growth stocks probably feel the same way. If you got in early on some puts, you probably had some hedging going on. I did. I got in early on some 200 puts. I got out too quickly. Maybe took profits too soon because I'm sure those would have been evening out all my losses by now if I had held on to most of them. And that's just a lesson learned on my part. But I'm like in the position now where I'm just trying to kind of gain more liquidity so I can make the right trades. So me personally, like, do I think there's a trade here? Yes. Do I think it's guaranteed going to break out Monday and just start running? No. I think it's possible. It does something a little bit sour and head south first. I don't think it's impossible. But I'm going to leave both doors open and we'll see what happens. Yeah, because this could be like an LSPY kind of deal where it's like a bear flag and then it drops. But I'm going to have enough liquidity on hand that I can make that play. And I still think it's going to come back up and hit that mark. And maybe it does it a little later than expected, but I still think it's going to do it. So I'm looking at it like long-term, going up into April, essentially. And then again, like where are those levels at? 280, 300. Okay. Maybe a spring first. It'd probably be a good idea for me to like check down that right now, actually. This is kind of a fun one because we don't do Tesla very often. And I was looking at this chart and I was like, it's just like everything else. It has waves. So this is exactly where it should be. Because when it came up, I was like, oh, so if it breaks down and holds here, it's going to come back up to that level. I think I had it going up over here. But that's right where it should be. That red marker would be the underlying like cut. And I probably made it too steep. Maybe it should have been like here, like more of a halfway point. And that's one of the way I do the wave measurements is just kind of like cut it in half. Jeez, that actually ends up being like near perfect if you do it that way. So I should have done it that way. Whatever. I didn't. I don't remember what I did. I think I just grabbed that bottom. Yeah, geez, that's like pretty perfect. Anyways, so what does that mean, Booksy? Well, that's just a wave. So like, if you look at the M crosses, then you take that into consideration. It's just again, I like it because it's like, oh, it's something different. And it's a case study of like whether this applies to other charts more regularly. That is an M cross of this creek right here, which was developed back in February. And we are seeing a lot of connection with the February sell-offs right now in our interactions on like the small caps and the large caps. Like everything is looking backwards to like early March, late February. And this is kind of a late February marker. That's the last outer creek until you get to this other guy. I mean, there's not another one, is what I'm trying to say. Like, that's the widest creek I could make. The last one would be this one, or the next one up would be this one, which is way out here. I mean, it's the one that's essentially going to be the first interaction, probably, up here at 280, or sort of in that region. Maybe it doesn't go until last minute, but yeah. Isn't that interesting? So like these waves are actually very consistent, which is nice. And it would suggest that this is correct. Like that measurement between these 2 points is in the right spot. Maybe for a Monday run, or if it takes a lot longer, maybe it doesn't completely go until very last minute, or get kind of close to that 50 in the last minute. I kind of have a red zone here. That would be like a last minute kind of meh pump to like just to get the 0.5 at 480 on like April 1st or something like that. April Fools, we're going down. Anyway, so I was measuring these waves. I was like, all right, so that's M cross 1. So that would cross this creek, which means that jump has happened. And if it came back down, you might expect it to come low. It could technically come all the way back down to like, let's say it did it today, it could come back down to like 230. If it does something like that, it puts it in a weird spot because that would be like an SOW as well. You'd have to kind of take into consideration that possibility. If it does that, then it's not exactly super strong, Booksy. No, not really, because if it went for that retrace and it hits it today at 230, it's punched below this trend. It widens it out and then also creates some other questions about, it's a small one, but it would be a SOW. Okay. So what's curious about this is like, I look at the waves, I'm like, all right, that's an M cross, that's a little one, but then go bigger and you can see that the first one was actually right here, and that's this guy. Now this is an interesting pre-existing trend, and it is these parallels coming down from the top. So this was some development way back here at the very, very tippy top in December. Like clearly bears already wanted to take Tesla down back in December. His writing was on the wall. It starts crossing down these EMAs and stuff, blah, 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 blah. This is the trend that's established. We're there now. We're underneath it. It took that much time, but we finally dropped underneath it in March. Now, this is interesting because this cross right here, again, using that same concept of like M crosses, it's an iterative motion, right? So like the middle is now right where it should be, right? Minus maybe another pullback. Again, I have this yellow line here being like, oh, it could pull back on the top. Could also pull back underneath. Both would have to be considered a possibility, right? And so when I look at this, I'm like, all right, I don't know yet what's going to shake out today, but that little M is like done. And so it's curious because I'm like, I think that's a 1 and then a smaller 1. So like a 1, 1, and then 2. This is a 2, then the next 2 should be this guy moving itself outward. And I don't usually look at this as like a 1-to-1 kind of deal, like where the wave has to be the same height, but it's pretty darn close. You can see that it would get you to like 274, which is right where that gap is. So the build out here, again, just the credibility of the bull case is growing because it's like, yeah, there's the same wave motion, 1, 2 on the outside. This is a 1, 2 potential here on the smaller creek, but then the 2 on the bigger creek would be this middle, and it would lead you up to the next creek on the docket. It's like kind of perfect, which is kind of great. It also puts you above like these 30-minute moving averages. I think that the 1 hour moving averages, you can see like there's a spread between 250, that's the 90, which is again the same as the 180 on the 30. But then also it takes you up to this point at 280, which is right where the hour moving averages are. So again, credibility to, well, if we made that move, it's probably going to hit there. That's the next step. There's one, two, three measurements, maybe four if you count the triangulation here that I made. And that's the next 50-50, right, down with the cross. So we got a lot of evidence pointing to upside on Tesla over the next month, or I should say the next week or so, as long as it, holds up here. Now, if it makes that drop down, does it kill everything, the whole thesis? Not really. It's complicated. Like I said, you could have a spring zone right here, and it doesn't even have to come this low. I mean, technically an SOW could be built out off of this low at 222. It could just come slightly below to like 220. You know what I mean? We're just kind of estimating like possibility here. We don't really know that has to happen. I think it's very likely that doesn't happen, but I'm not going to, again, backtrack on that after saying that I think it's possible. It's possible. Because if this M breaks down, excuse me, it could be a precursor to what we see later with this M them widening out as well. So it would not surprise me if it came back down and came really low before going. All right, liquidity-wise. But the EMA is in the right spot. That puts itself in a good position. And then the 4 hours, which I don't know if they're as likely going to get checked right now, but they are at the 618. You can see they're coming down in time. They would reach the 618 for a retest, should we want to get that. And that, again, that's the same level at 300 that we were expecting to hit. The only thing about that, and I guess this is worth mentioning, is like if it does not stop at, let's say it hits 280, it rejects pretty hard, and then it pops, and it goes all the way to 307. I don't think it's out of the question, but it would be an interesting topic once we get there, because you'd have this broader creek that would, again, need to be probably retested if it just goes. And I don't know, man. At that point, why not just look at 180 and just have this massive drop? I don't know. Maybe that's what's on tap. But if you create that high there, it's going to generate like a new trend. And I don't know what it's going to look like yet, but it would be interesting to see, because that would be outside of this current structure. It's kind of a rotation, maybe on the previous trend. You see these blue lines? You guys are like, I know what you're talking about. You're losing me, dude. You're going too faster. Or you're just talking nonsense. Either way. Well, notice this guy, when it pumped through, this particular motion right here, that massive sell down, that could be like a rotational symmetry of sorts off of this trend here to get you up higher. So I made it go beyond. Let's just not do that. Let's make it go just to the lower. So I think this is the most solid trend that we have, these blue lines coming down, personally, because I think that they follow through more readily in the middle, and especially this one. If you take this and you go to the top of the blue here, that is potential, right, for an extension, because again, you flush beneath and then you could flush back above. That does happen. I mean, it does. So is it possible this thing could go up to even higher, like 315? Yeah, on a flush. But it would be something like this, where it would like go up and then dump back through into the channel, so on and so forth. What about trajectories? I haven't done trajectories yet, but I guess we could do that real quick. This will be the trajectory in. This is a 80. No, that's not right. That's the number. This is a 66.92 degree trajectory. We'll go 66.96. So that's really steep. It almost looks better as a spring if it comes back down, because that actually matches really well with the termination of April 2nd to hit that mark. But I think we'll know like in the morning on April 2nd, so maybe even sooner than that. This is still the first. I always thought like if we were going to go up, we'd probably be dumping by the first. It'd be priced in. I don't know. Monday, that Monday would be the last up day. It's a 4-hour chart, so maybe. I don't know. It's hard to say. That's really hard to say. I'm not really sure. I'll split the difference. I'll go middle of the day Monday. That kind of supports the idea that this comes down, but maybe it doesn't break down. It doesn't really matter though. Like it makes no difference because even if this came down again, I wouldn't abandon it necessarily. Like that doesn't mean much. It's just a trajectory. This is like a curve around it. This could curve around it. Maybe it's already doing that. For all we know, this is like curving down. Come back up. But anyway, that's a trajectory. So I'm done with Tesla. That's all I'm going to talk about it. I think there's a decently strong case that this is going to come back to near 300, 280 to 300, which is quite a bit of distance away. Did you teach yourself from books on all this TA? Do the iterations of the downside still play out when there's bullish news? Yeah, more so actually if there's bullish news. Because when I talk about iterations, I'm usually talking about shrinking. If I'm talking about a widening iteration, that could be a little bit tricky. Because a widening iteration, you're looking at a expansion, right? It makes more sense to think about it as like, oh, this is a pattern that's now expanding on the larger time frame. That's what we're talking about on GME. Iteration downward, if we were talking about, it doesn't really matter if it's down or up, I should say. Really what matters is it shrinking or is it expanding? If you see a pattern here playing out and you're seeing it shrink and it's accelerating every time, at some point, if you do the math, and it takes a little bit of effort, but if you do the math, at some point it runs out of room. Meaning like it can't do what it's been doing. Like if every time it diminishes by this and the ratio goes down this and this and this, like eventually it just doesn't work. That's usually what we find. So you do the math on it and you're like, yeah, this is changing at this pace. And at some point it no longer works. That's usually where the termination is on the iteration. A shrinking iteration, especially if the volume is showing that it is diminishing, almost always indicates like an exhaustion. And it makes sense to me. If it ain't broke, right, they just keep using the same pattern to drive the price down. If we can pump it and then dump it and drive to a new low, all right, let's do it this way. Well, then it worked. All right, let's just do it again. Well, then it worked again, but it has a lesser effect. All right, let's just do it again. All right, it worked, but it had a lesser effect. All of this is not in a vacuum. It doesn't happen outside of what might be like a bigger, move here where you have to consider like, all right, just because this is shrinking down doesn't mean it's going to just go to the moon. Like, no, it means that there's probably something else at play. Usually there's going to be a reaction at some point. In this little example that I drew, it's probably going to be a reaction to the top at some point, or an auto reaction followed by a phase B top to that point. That's the trade. So when I look at the iteration kind of setups, if they're doing something like this, I'm like, all right, where would it go? Where's the 50% marker? Oh, it's here. This is where it broke down. Okay, well, it's probably going to head to that point. You know what I mean? And it may not get there in one fell swoop. Sometimes it does, sometimes it doesn't, but you're probably going to have an auto reaction and then like a phase B type top if it's bullish, or a distributive top. That's totally tradable. It's like one of the easiest patterns in the market to trade if you can see it happening, because it's like super obvious. If sellers are getting exhausted, even if there's a selling climax, you're watching those things shrink, they're compressing it, then it's going to have a reaction. Where is it going to react to? Probably back to, preliminary supports and or floors of previous ranges, things like that. When people asked me about, they asked this a year ago. I mean, it was a long time ago, right? But people always want to like test your credibility on everything. And when people ask, did you call out that May run? Yeah, the answer is yes, I did. And I'm not going to apologize or be, belittle myself about it. I did. If you ask me, like, were you timed it? Did you time it out way in advance? The answer is no, I didn't. But the reason for that is quite simple. Like, there's a termination point here, but it's really hard to identify all the time where that's going to be. You might think that it's over right here, and you're anticipating it's going to go back up to that marker. Guess what? That's kind of what I did. I actually thought it was going to go up to that marker and then come back down. I thought it'd be an earlier reaction to 14 and then come back down to 2.5. That's exactly what happened. Meaning, like, I thought it was going to be going up early and then come back down. But that's because I just misjudged where I thought the bottom was. Instead, it went down and then came back up. But I never let go of 14. You can go out. Just don't let her in. I never went back to on the 14 thing because we didn't make the test. So when we got down there, I'm like, well, I guess we're going to go really high. I thought it would take longer. I thought we would do something like this. And instead, it went like this. You know what I mean? Like, okay. I remember saying I thought it would be like 2 or 3 months of this kind of stuff, like a big S-curve up or something. Why was I so convinced it was going to go to 14? Because they left it. They didn't check it. And they don't, it doesn't matter the scale. If you see something like this building, it's going to get tested. So I use shrinking iterations. I use what I call like that shallow S-curve bit. You can see either one. But just to be fair, an iteration to the upside has just as much probability of turning around as an iteration to the downside has of turning around. So like you have to be really mindful that you can't bring bias in when you're just talking about a fractal. It's just a fractal. It's just showing you a behavior pattern that's repeating. If you see that behavior pattern repeating to the upside and it looks like it's weakening, okay, well, maybe there's a stronger chance. I'd say there's more than a 50-50 chance. There's probably a 60-40 or 70-30 chance it's going to turn around. We already know this, guys, because we know that a rising wedge is more likely going to turn around than break out. But sometimes it breaks out, Booksy. Yeah, sometimes it does, because sometimes this goes into like a drop. It does a quick drop, and then it just rallies. And then we call it an S-curve, right? But does this normally happen in the market? No. I mean, normally if you see a rising wedge and it's got diminishing volume or whatever, and it breaks down, it just breaks down. Comes back to the place it started, you know? So what you're saying is you just developed a fancy word for a simple idea of widening and narrowing spreads. I don't know about that. I think fractals are exactly what they say they are, which is they're patterns that are playing out within themselves on different time frames. I think of it all as the same. I don't really think of it as like competing ideas. I think that's silly. Because when you're doing TA, you get to use whatever you want to use. You use everything. And I don't see any reason to just limit yourself to one thing. Like, there's people that do that because they just think it's easier, or they think their one thing is the best. There's people that only do Elliott wave. There's people that only do Wyckoff. There's people that only do, pattern trading. There's people that only do this kind of trading, that kind of trading. Great. Do it. Make money on it. Find what works for you. I've found myself falling more and more into the hole of, or I should say fitting myself into like a kind of a trend trading with waves. I think that's typically what I end up doing. But if I see something like an S-curve, like I'm going to pay attention to it. I'm going to call it an S-curve and I'm going to just use it. If I see something that looks like a shrinking iteration, I'm going to use it as a way of helping me time out moves and stuff like that. If I use the indicator, if I see an indicator that's got divergence, like I'm going to use it. If I see a pattern that's forming that's a flag, like I'm going to use it. If I see a pattern that looks like a diamond bottom, I'm going to use it. Like, it's not complicated. Did I teach myself? Did I read books? I don't know, both. I didn't invent Wyckoff. That didn't come from me. That's all from previous knowledge. I couldn't have just learned that through just, it's not like yeast where it's just in the air and it just comes upon the flour, It's not just in the air. You have to go find it. It doesn't just seep into your brain all of a sudden. Part of that was just listening to other people like Stockfather and like asking him questions, like a mentor kind of thing. Part of it is just reading, like going to the website. What does this actually mean? When so-and-so says creek, what does it mean? When so-and-so says distribution, like what are they really talking about? What is an upthrust, from the point of view of somebody that's studying Wyckoff? Like what does that imply? How do I read the volume in that? You get used to it if you look at it more and more and more. That's the experiential model where you're just kind of seeing the same thing. Oh, this happens when this happens. That's a lot of what we've seen in the last few years. It's probably why, for the most part, like I've done more learning than I have actually doing. And I'm just being straightforward, I have traded a lot, but most of the last few years have been mostly just charting. The reason I took a turn this year is because I decided that kind of don't want to just do that anymore. I feel like I'm not there yet. I'm doing the best I can. I can always get better, but I spent like the greater part of 3 years charting AMC. If that was for nothing, and this is what I've always said to people, because we get people that come in and say like, well, you don't have to do that. You just have to buy and hold. And I'm like, okay, yes, I agree that if you're just trading one stock and you believe in that stock, you can just buy it and hold it. Occasionally look at your portfolio. You don't have to micromanage it. You don't have to learn charting. That's fine. If you bought Pixar back in the 80s, which I don't think they were public then, but if you bought them back in the 80s before Steve Jobs and all that stuff, like sold it or whatever, then you'd be like really, really well off, right? But at the same time, like if you bought AMC 3 years ago, would you be really well off just holding it? No. So one of the things that bothered me early on was like there's this kind of backlash against TAs. People are like, well, the market's manipulated. You can't know. It's this big scheme. And I'm like, yeah, sure it is. But why would I waste my time waiting for this to happen? It's one or the other. You're either gonna, and this is what I get on people about. I'm pretty, I try not to be nasty to anybody, I promise you. But I do know that I get kind of curt and like short with people sometimes. People that come on here that tell me that I'm wasting my time, I don't understand that. Because I'm like, listen, man, I'm not wasting my time. I've been sitting here like learning for 3 years, everything that I could possibly learn. That is never a waste of time to invest in your own education. Why would that be a waste of time unless I just don't use it? Hence why I want to use it. But then when folks come on and they say like, well, you've been wasting your time. And I'm usually like, well, then what are you doing? The only real waste of time is coming on here to like check on your stocks 24/7, but not learn. To just sit there and be like passing judgment on other people, or like, why would you do that? Why would you watch a chart stream if you're not going to try to like develop yourself? It doesn't even have to be that you agree with everything the guy's saying. It doesn't have to be me. It could be anybody. Go watch your favorite person. I don't care. But why would you want to sit on a stream and then just criticize people? That's a waste of time. Me charting stuff is never a waste of time if I'm learning. And especially if I'm kind of learning from both good and bad. How is that a waste of time? Like, it's so bizarre to me. And we've had so much of that. That's why I've got 26 people on the stream instead of 260, because I think a lot of those folks were like, this is a waste of my time. I do not have the capacity, nor do I want to sit around and chart all day, every day, or whatever. Like, they don't want to do that. They don't want to day trade. They just bought the stock in order to hold it, and this guy is not telling me that it's going to go up right now, so I'm going to just kind of click off and be done. That makes more sense to me than someone who comes on and you're just like, you're wasting your time, man. It's all manipulated. Here's the real truth about, this. Let me tell you my answer for $25 a month or whatever. I know the truth. You don't. So you got to pay me for it. All right. It's one kind of leads into the next pretty quickly, right? That's just human absurdity to me. I'm like, I don't get it. The only thing that could waste your time at this is if you just don't want to learn it. But I get it. Different walks of life, different folks, different strokes, that kind of thing. I don't care if you're somebody that's like I don't pass judgment is what I mean. If you're somebody that's like, hey man, I just wanted to buy and hold this thing. I don't really care about the charting that you're doing on like Tesla or this or that. I really just want to know about AMC GME. That's fine. It's totally cool. I get it. I do, because it's like for you, there's no reason. You're not going to take it and like use it. Once it hits the target you want to hit, you're out. You're probably done. And this is just a chapter in your life that you close and you move on. I mean, who's to say that's not a bad thing? I think that's totally normal. For a lot of people, it's going to be the case. A lot of people got into this stuff, remember, because of COVID. Nobody had anything else to do. But all those new people coming to the market with all that money doesn't mean that all those people are going to stay. You're going to have a lot of folks that come and go pretty quick, and some people that come and go over a long period of time. They realize it's not for them. I think that's totally cool. My point in all that was just to answer your question of like, how did I learn TA? I did basic stuff way back. And I mean that sincerely. Like it was probably like, for me, it was way back. You guys are like, way back's like 50 years, Booksy. Okay, well, I'm not that old. But for me, it was a long time ago. It was still like half a life ago. Okay. So like back in the day, when I got out of college, something about stock trading was appealing. I don't think it was just the idea of like making money doing it, but I think it was just that I was gifted certain thing, not a lot. And I mean, guys, this isn't me saying like, oh, he's got millions of dollars sitting in the bank. I don't. But I was gifted like a very modest, like small investment. And I thought, okay, well, from parents, and it wasn't huge, but it was enough to kind of start something with. It was around 10 grand. Okay. And as a young person, you're like, oh, that's interesting. Like I got something I can do something with. I don't usually have this much cash on hand because I'm usually paycheck to paycheck. I'm just coming out of college. I'm flat broke. I don't have a career job. But I am working, I'm working on a boat at that time. I was working as a deckhand for a few years. So in my downtime, I started learning how to chart, and I was like, I got this other thing. This is an avenue. It's an asset. I can use it. And for the most part, I squandered it. I think there was a part of me that did pretty well. I mean, at one point, made some good money, but at the end of the day, it kind of just came back to like, okay, well, if you're going to day trade, you got to day trade. That's what I decided. It was like, I couldn't keep up with it. It was one of those things where it's fine if you want to do it, but you got to commit to it, because especially now, like we're going to be moving into a 24-hour market system. I know this sounds bad, guys. I don't really want that. I actually would have preferred to just have it nobody trade in extended hours, just pause the market. Like we don't need to spend 24/7 on our phones or whatever. I'm kind of grieving it a little bit because I think that it's just a money-making machine. I don't want to be all about money every day of my life. That's not my thing. So I may even go to like a more modest kind of system soon where I'm like maybe trading like once a week and just leaving it at that. Just find a good trade and go with it and then be done. I don't really want to be in a 24/7 trading cycle. I think that would be stressful, but that's probably what's going to happen. And, if you're not going to be active on it, then anything can happen in that time frame. It's just not environment, you either do it long term, you have your 401k, which is, obviously other people are investing that. But yeah, I mean, you either do it long term and you just say, all right, I'm going to buy for long term and never look at it, or you're an active trader, in which case you got to pay attention, and it's kind of a job. And at that point, I decided, well, the main reason that I would lose on a contract or lose on a position was because I just couldn't pay attention to it. That was the first story. The second story was more complicated than that, but like a lot of people during like the COVID era and stuff, and slightly before then, I was starting to look back into the market again. And that's the end of it. So when I got to the second period, I had already learned a bunch of stuff about basic day trading techniques. I knew what an indicator was supposed to represent. Like those things were already kind of basic for me. I had ideas about how to trade based on certain indicators and this and that. I used VWAP a lot in the first time I traded, and that was a big one. And then I also used, RSI and MACD. Those were my big three. And I learned a lot about pattern trading at that point, and I learned about trading in channels and stuff like that. When I came back to the market, I learned about Wyckoff, more about Elliott Wave. I still don't know everything about Elliott Wave. Elliott Wave is pretty darn technical. And I like Elliott Wave. I just haven't time to commit myself to it. But like Elliott Wave kind of took a back seat to what I saw as like a fractal study, which wasn't a waste of time, but it did lead me to a deep understanding, in my opinion. I think it's a deeper understanding of like liquidity in the markets and what we're really seeing on bar charts and stuff. And I don't know, man, would I have years ago said something like, hey, if this candle on the daily closes beneath this particular creek, it's going to be bad? No, I wouldn't have. I wouldn't have questioned it. I would have just thought, oh, it's higher. It made a higher high or made a lower low. Like those are the more basic terminologies. Not everything is a trap, but there's certainly like evidences out there to suggest like, hey, that's a weakness. That's like letting you know early. That's not something I ever would have looked at. So I don't feel that, nor is the wave stuff, by the way, like really understanding the wave breakdowns and those possibilities. That's all been learned in the last few years. What are my areas of weakness? My areas of weakness are still getting out of trades when they're not good. I mean, it's that simple. You need to be self-disciplined in the market. If you don't have a good trade, get out, Don't let it just fester till it dies. That's a big sticking point for me. Because sometimes when you're too in the weeds, you don't see the forest through the trees, right? That's the expression goes. So I'm sitting here like looking at all these little things, and then the real big picture is that like on IWM, like the big picture was that death cross. Well, that's going to cause the market to panic sell, even if it's not really that bad. And then I have to sit back and look at that and say, all right, well, I didn't see that coming because I wasn't really looking for it. Everyone else is looking at it. That's a problem. That's a big weakness. I'm too much in my own head about these waves and all this other stuff. Like, it's great. It works when it works. But if you're not paying attention to the bigger picture, same thing with the Trump administration doing the tariffs. The market saw it coming. There's clear weaknesses early on. They knew it was going to happen. There was uncertainty about what that was going to look like. World news kind of stuff, right? Tech news, all that stuff. I'm not a big fan of like reading the news all the time, but I've been doing a lot more lately because I think it's important to just be aware of, hey man, this is going to affect you if you're in this market. So be aware of it. I still hear people say like they don't want to hear about politics. And I'm like, look, man, that doesn't make any sense to me. Fiscal policy is a huge part of what runs markets. So if fiscal policy is uncertain and tumultuous, which it's been, it's going to dump the market, Um. Anyways, yeah, I'm a lot of things. Not all of them are good things, but at the same time, you're not just a summation of your parts. I mean, I could have all those things removed in an instant, and I'd still have to, you know, find my value somehow. So I don't believe that any of those things by themselves or even altogether necessarily defines me. People will say like, "What do you do for a living?" And I'm like, I don't know, lots of things, I guess. It's kind of a hippie mentality, I guess, to be like, I don't know, man, I just live life. But that's how I feel sometimes. I'm like, I don't know, man. There's a lot of good things. There's a lot of bad things about me. So what am I supposed to do with that? I was reading the other day about people marketing themselves, and we live in a world where you can Google and do all this other stuff and just dig into people's past and all this stuff. It used to not be like that. It used to have, you know, um, I wouldn't say not the idea of like hiding anything, but just like your public persona was not bound to some like ethereal bunch of information elsewhere. And so these people are developing all these ways of like managing reputations and people coaching you on how to properly portray yourself online and all this crap. And I was reading about some of this stuff. I was just kind of interested in just read the article, and I was like, we're very we're very much the same human race. Like we're very tied to self-image and self-promotion and trying to be the best version of ourselves for other people, which I get it. If you run a business, your face is part of your business. I get it. But you want to portray yourself a certain way. But I'm like, dude, if the internet suddenly went away for some reason, and I don't think it's going to, but if it did, none of this would matter. Like, none of it would matter. Like, the only thing that would matter is how you treat people who are just directly around you. And ultimately, like, everything else kind of just boils down to a temporary effort to, bolster a reputation or something. And I'm like, I don't know, man. I'm not sure. I'm drawn to the same things that everyone else is drawn to. Like, I want that, as much as the next guy, I guess. But I kind of recognize that, in my own opinion, there's kind of a futility to it. It's just sort of silly. I know it's a little offhanded, but it just made me think about that because of what you said. But I have a pretty crappy, overall, I think, in the grand scheme of things, my reputation wouldn't be like the best reputation. But I think when you look at a life worth living, I don't know if that's kind of a goal that I have in mind. Trying to like decide, do I really care that much? Do I want to self-promote? Nah. I have to do that with my animation stuff. Like, you have to kind of put your best foot forward because people don't want to pay for it. And now it's even worse with the AI. People have like an excuse to like not pay for it. Well, I can just go get AI to do it. It's going to be just as good. Well, first of all, it's not going to be just as good, but that's okay. You can believe that, I guess. Second of all, this is not really anything new. Like, no one's wanted to pay for it anyways. People don't value certain things. Cost is only ever an issue when there's a seemingly lack of value. And if you don't value something like an animated promo or something like that, then you're not going to want to pay for it. But that's bonkers to me. It's what drives so many people is like the branding stuff. And I'm like, how do you, if you're basically simultaneously saying that you value your image, you value your brand, but you don't value it enough to pay for it. I'm like, so then what's the point? Like, what are you trying to get at, Just do it yourself. And now they can. So they can use an AI bot to circumvent the artist and so dumb. Um, and it's bad, guys. I know that you guys think it's great. I see people posting like, this is amazing. I went to I went to this guy's thing on like it was like LinkedIn or something. I was like looking around on it for some job lead kind of stuff, and I was I use their jobs platform sometimes every now and then, check in on it. And this guy was posting about how he made this really elaborate video, and it was like a commercial type video on a phone. I don't know. It's kind of meant to look like a Pinocchio like character, but he was like a snowman or something. I don't know. And they did it with AI, and he was boasting about how the cost of it was so low. And I'm like, first of all, you have no idea, because the ecological footprint for AI is massive. Like, it costs so much money and just so many different things to run AI. I don't think people understand that. Like, there's a huge cost behind it. If you look at what actually it takes to kind of run these machines and stuff. Anyways, and then there's other costs associated. But he was like boasting about the cost and like the time it took. And all these people were like heaping compliments on this guy. Like, he's this great artist or something. And I was like, okay, that's interesting. He's not an artist, but that's all right. But he says he is because he used the AI program, and the AI did it for him. And I'm like, okay, so the AI makes this great program, this great little animation thing for you. You're showing it off. You're boasting about the cost and the time it took. I'm not going to debate necessarily the idea of taking jobs away. If people think that something's irrelevant, that people don't need to be doing it, fine. I don't see how you could possibly argue that in the course of civilization that the arts are irrelevant. Like, literally almost everything we know about past civilization comes from art and literature. Like, that's it. We don't know anything else about past civilization except art. Art is like the biggest window into culture. But you could argue, sure, that it's not important, has no value, yada, yada, yada. What was funnier was that I, as an animator, I looked at it, I watched the video, and I was just like appalled. The motion itself, it looked visually like a still image looked fine. It would have looked really pretty. It was like a really fancy looking, like golden coated turd, kind of thing. Where like on the surface it looks great because you kind of take a still image of it. It looks really pretty. It looks like a shiny object, right? Ooh, this looks so good. It looks so professional. But as an artist, I was watching and I was like, man, this lighting is wonky. Their movements were janky as all get out. It looked like they tried to emulate stop motion, which is the biggest slap in the face to humankind I've ever heard of. Because stop motion is literally meant to be like camera captured animating, where you're moving an object that's physically there, like physical object with real lighting. And the animator is like directly moving it into the camera captures, right? Into each camera capture. I mean, it's the most direct form of animation in some ways. And and it's done in forward straight ahead animation, which is very challenging. It really is one of the peaks of the animated craft. And they made this look like an animation that was supposed to be real, but it was fake. And it was not even, it was like so multi-layered fake. And I'm like sitting there like, wow. So not only is this like a fake stop motion, which is supposed to be real things, and until an AI robot gets its own body and then takes pictures of stuff, and that's a hugely complicated, long process that would have to be involved in that. There's no way AI is going to make, unless we give it limbs, and it has the same way to articulate as we do with our hands, is never going to be able to make a stop motion animation ever like a human being could. It's not possible. So it's like this huge slap in the face to like humankind that this is not something that only humans can do. And then the animation itself was terrible. Like, it moves, but there was like no overlap, no follow through. Like, all the principles of animation were like missing. It was just, they just told this AI bot, like, make something that looks pretty, make it move. It tells a story, it's effective, but it lacked all semblance of human interaction, of actual like craft. And I was watching it and all these comments, and it's just like, we're so disconnected from each other and what we actually do that we don't understand the difference. Like we as a humans to human, that we don't understand the difference of what an artisan does. Like, we can't see it. Like, the common person couldn't see the difference. And I don't get that, but I understand it. And I think it's kind of like any job that's going to get eventually challenged by AI. Like, we just think it's not valuable enough. We think it's unskilled labor or something, what people call it. And I'm like, that doesn't make any sense. Like, everything's kind of skilled, to some degree. Can anybody come in and learn how to scan? Yeah. That's why we all have self-checkout now, because we can scan our own objects. I get it. Some of those things are going to be replaceable. But, like, there's so many jobs where I'm like, the human touch is so important. And we just kind of dismiss the fact that somebody had to learn these things. And I heard the guy talking about, the OpenAI guy talking about how, like, he wants to go to Congress and tell them to, like, use copyrighted material to let them learn. And I'm like, why? That doesn't make any sense. Why would an AI robot be able to use copyrighted material? Period. Like, you can use it to learn, I guess, but to use it, because that's what ultimately happens, is that they've been copying other material. I don't get to go in and, like, copy someone else's patent as a person. Why should a robot be able to do that? That doesn't make any sense. You shouldn't give them, like, extra privileges, They should learn how to navigate intellectual property just like anyone else. And until AI can have, like, an original idea, and yes, everything is derivative. I get that. We take one thing, we make it into something else. I get that. And the art itself is like one of those things where it's like, man, everything's derivative. Like, you're just learning from the past. That's fine. I'm not against that. But this idea that, like, they should be able to use this kind of material in their own stuff, like, directly, no. Without consequence, no. I don't get to do that. If I take someone else's artwork and I just plaster a different paint job on it, I will get sued. You know what I mean? And I should get sued, because it's not my right to use that work without that person's permission. They made that. And the same thing should apply to all intellectual property laws. It doesn't make any sense. I don't care if it's art or if it's engineering, it's some patent for some object. You can't just steal it. There's a reason we made those laws. This is wrong. If somebody says that something's public domain, that's different. Hey, you can use this all you want. There's been a lot of inventions in the past that people are like, hey, I want to make this available to everybody, so we're not going to copyright it the same way. Dude, that's their choice. They should totally be allowed to do that. AI, go for it, That's how I feel about it. I think artificial intelligence is wonderful in some ways. It's going to change the world in a lot of ways. It really is. But the ethics behind it don't seem very clear to me right now. I don't really understand the arguments that people make. It's usually because they just don't value something. They're like, I should be able to make art with whatever I want to make art with. I'm like, yeah, that's because you don't value it. You have no idea the effort it took for that person to make this. And apparently people don't know the difference between stop motion and fake stop motion, which boggles my mind. I thought that was the funniest thing. I was like, really? These people think this looks good. I just could not. I was like, it only looks good if you pause it. Like, I just don't get it. Oh, well, it'll take time. It'll take time to get better. All right. I don't know, man. I don't really want it's no offense, because I respect people that do math and programming and stuff. Clearly, I like math. I do. I like it a lot. I have a high respect for it. I'm doing it right now, right? But I don't really want programmers to be making animated movies, like, at the end of the day. I just don't. We have enough trouble as it is getting good stories out there that aren't just complete rewrites of old stories, I just quality quality storytelling is in high demand right now, in my opinion. We just don't have a lot. I just don't want AI to make it worse. Speaking of AI, I was thinking about quantum computers the other day, and people don't like quantum computers as much because they think the technology is not as effective for certain kinds of problem solving, and they're not wrong. It actually gets answers wrong sometimes, which is sort of interesting if you research about it because of what quantum computing is doing. And it sounds like it would be some great thing, right? But they call it QPUs, like quantum computers. They're different. The way they go about problem solving is different. So they're going to be good for like certain things, but not as good for other things, which might surprise you if you didn't know that. And I'm reading about it and I'm like, this is pretty interesting. So this AI stuff has really challenged the idea of the need for quantum computers to continue advancing, but it's this technology that's been like burgeoning. And evidently the CEO of NVIDIA tanked quantum computing stocks because he said something along the lines of like, they're not going to be as good for about a decade. Like they're not going to be relevant is basically what he said. It's going to take 10 to 15 years or something before they're relevant or something like that. And it just destroyed the market. And he was like surprised that he was like, oh, I didn't realize that me saying that would matter. Well, NVIDIA is investing in NVIDIA, IBM. There's like D-Wave. There's like a IQON or whatever it's called. I don't remember what it's called. Those are things that like they're investing in right now, but I'm like, okay, so that's weird to say that, first of all. But then also I was thinking about how like really the ground floor operations for those have been now anyways. And if you were going to get in super early into something in your lifetime, you've probably missed the AI one. I mean, it's happening. It's going to continue to happen. But that was the big one, I think, this last big push. It's not as good as it will be, I'm sure, in, again, maybe 10 years or so. It's going to be completely different. But I was really interested in looking for those stocks. I was like, man, I got to find some quantum computing stocks. That's the next one to jump on. And then I was surprised to find out that apparently the NVIDIA CEO like crashed the market for quantum computing stocks. Just talking casually to somebody about it. Like, oh yeah, it doesn't matter. I was like, what? Oh boy. I haven't really looked at SPY today. We'll take a look at this. Probably be the last thing we do right here. Maybe SPY and I think what we'll probably want to do is, and I might check out HEPA for you, Jason, but I might take a look at a couple different things here. I want to just check out SPY. It's about the same as IWM. It came down. I knew this was going to happen if it dropped 565. Not as a predictive measure, just because that there's nowhere else to go. And they made a weakness early on the Wednesday. That Wednesday it dipped down. And I was like, it's probably going to come back down to here. And it did. I didn't say it at the time, and I thought at the time it probably wouldn't be bad. If it can make that advancement again over this creek, it's going to be fine. But in the meantime, it does look like a distributive action, right? And it doesn't look particularly bullish if you're looking at it from that point of view. Because you're like, well, technically it came higher here, Booksy. Yeah, it did. And in this case, it just looks like it was a distribution because it made a lower low here and then it came back up again to pump. So it doesn't look particularly strong. I think if you were going to make a case that you were still kind of bearish, SPY would be a lot easier in some ways because aside from like the death cross we talked about, SPY might be easier today because you could probably look back and say, I think this is going to crap back out to that gap. And just like we were talking about before, maybe try to do an SOW. But I think SPY already did it, so I'm really not sure why we would need to do it again. It is on a midway point, and I had a back and forth with some folks in the Discord about maybe where that goes, and I talked about the highs and the lows there. This is kind of bearish divergence, obviously, on these two tops. It doesn't look overly positive, right? it kind of has the appearance that if it stops short right now and doesn't come back above 563, which is this midline, that it also would stop short here and then just capitulate and come back down. But I would urge you to kind of observe the nature of the waves here and just remember that like this is still like a cross up and over that's happening. So unless it like just completely comes straight through and just does not hold anything, it's hard for me to look at this and remain overly bearish for like the longer period of time. I guess, I don't know, like maybe the midterm is a better way to put it. Like it didn't quite make it up top. This is a 30-minute chart and it peaked early. It just looks to me like it's still building a bottom. So I'm not positive about this like anything else. You know, I think there's debate. This is a little outdated. It's probably what, actually, you know what? It's probably was made on the extended hours. Yeah. Because that looks wrong. This is March 27th. This is April. So I did it on the other one. I'll just delete it. I mean, to me, this still looks like it crosses up and over. And it's hard to say because, again, on extended hours, this looks very different. It looks healthier. Regular trading hours, it looks kind of ugly. Like, looks pretty bearish. So we'll see. But I do think this is a cross up. So I don't particularly worry about this. If it comes down low, it comes down low. Fine. But if it hits a bottom here, I think we're still going to see a pretty big reaction to the upside. And I'm looking at the structures, and I'm thinking it's this drop right here, this first 50% drop right there from February 13th down to the 25th. Now, it doesn't have to be one-to-one by any means. It's kind of a mess, isn't it? Should be right there because that is the first half of the S-curve, and then this is where it looked like dropped through. That should still be like the reaction. So even if it came down like low and made a new low, you'd still have a pretty big 4 or 5% reaction there, very likely, which is sort of what I have illustrated on the sideline one. I didn't really do this on purpose, but it's kind of like what that is. That they would probably pop after a substantial drop if that happens. The way that I had it measured out was to that point, though. That's like the midpoint right there, and that's, again, the 583. Right now, it rejected it. Right now, turned back down. Right now, it could be thought of like, hey, it just broke out of that trend, so it's done. I don't think it's that simple. I think it's probably a little bit more nuanced. There's always another trend. And if one fails, the other may hold up. This one still looks kind of weak. This one looks like it didn't really hold up. Well, no, it actually looks fine. It's a lesser trend. It doesn't go as fast. It's still there. It's just not steep. So the steepest trend looked like it would pivot and head up to 582 potentially today. I mean, that seems kind of crazy, you know, but that's what it looked like. I mean, we'd be insane, wouldn't it, if by the end of the day it was up here. But that is what it looked like to me. Could it be? I don't know, guys. It would have to be a spring that goes up SOSs and then just rockets. I don't think that's very likely. I'm pretty sure you would agree with me. That seems pretty unlikely right now based on everything we're seeing. What's more likely, I guess, at this point is that it did indeed have some trouble here at the top, and it's going to cross lower here. And if it can manage to cross it, it looks like it does it Monday or Tuesday on this side. That's if. And it may, again, it may make a SOW first, so it may drop down lower and just show, hey, we're going to come down here later. And then potentially, you know, we can come up to 575. We may not make it to 580. That seems more likely to me if it's going to still try and go one more time. I don't see the RSI as not supportive of that. I think it looks, again, correct. Is it possible that you're wrong? And I mean, of course. When we look at this as an S-curve, I was asked to do this as an S-curve, and I said, well, I already kind of did that because I was looking at this as like the first, and then this being like the second, that there's a much larger one. This looks like really, really far down. But It's hard to know like where the bottom would be. I think it's right here. Like I think that's the midway point on the S curve is right around 555 where the creek is, because it would have to be on like a creek, for example. Like that's what this did. It was like a midline on a creek. If this were to have a real fancy crazy drop, it looks like 500s in view, in my opinion. Okay, there's other reasons it could go to 500. There was an early SOW back here. That's a sign of weakness. Technically, that even goes lower. I think it goes to like 480. And long term, that leads you back to retesting previous tops and stuff. So it's not out of the question that this comes all the way back to like 480 if it slumps again and drops. I think that's kind of like recession level stuff. But the S curve itself, at least right now, you wouldn't measure it past 500. It'd be like maybe like 495, I guess. But it'd be this level right here. So if SPY does break out to the upside and we get this kind of way crazy reversal here, and I don't think it's impossible. Yeah, I mean, you could be hitting the top of this channel today. It'd be kind of bonkers, but you could. That's where the original pivots were, right? I just think it lost that steeper channel. So at this point, I have to say, I'd agree with you, Mr. Momo. Your name's funny. If it went up today, I would have to say, yeah, it probably only hits 575, not that top point. Because because it lost the lower channel, I think it's more likely it would get stopped here. Which again, kind of crazy, if we see something like that. Easiest way to know if it would to do something, and I'm not going to trade all day today, but would be if it jumps over this little red zone that I've got, the gap zone. If it jumps over that, it's technically over the creek. So it could go. It's not a very steep creek. I mean, there's room to come down again, but not much before Monday. So if it does jump it, it could easily hold that and go. Okay. AMC already hit its low, I think. It's very possible that if we don't just go sideways and stay at 3 today, it could also pop today, I mean, it kind of came down and did what it was supposed to do. So at this point, it is jumping up over the creek. It hasn't gone over the ice yet. See that? It pops today. It's probably going to go up to... Hard to imagine it going up. Sorry for clicking like that. It's hard to imagine it going up past 311 today. But in theory... if it does have a big reaction, it should be going up to here, like 319 or something. That, again, we were talking about that earlier. It could just be us going to push the next level. It doesn't have to be like crazy. Just go up and push the next level here, and then you're in good shape for next week. IWM's a little different, so I'm not sure. Anyways, all of them look like they're kind of dropped beneath the ice. They're hooking / trying to find a bottom. If they jump the creeks today, you could get a rally end of day. But if they don't, I don't really see them moving very far right now. Kind of sitting where they need to be sitting. Yeah, Tesla's running. I guess it's just going. That's good. Oh yeah. So real quick, let's do... I'm going to use this TNA chart. I wanted to do the D-Wave chart, but I don't know what the ticker is. QBT. Oh yeah. Nice. Very good. All right, I'm happy to see that, actually. That looks good. Interesting. So this is the one that looked pretty rough. That's still way up there, isn't it? Yeah, this is a tough one. I think that's done. I mean, just at a glance, it looks like distribution, but this would be like a UTAD. I have to see if it came back below. If it didn't come below this point, it might be okay. It looks like it did. Maybe not. No, it didn't. That's tricky. You know, unfortunately, to me, it looks like the waves here are pretty straightforward. If it doesn't hold, it's going to come down pretty far. Like all the way back down to 370. It could be an SOS, but even if it were an SOS, it doesn't look like one because of, again, the high volume, the lack of strong closes above it, it would still be at risk of being a backup to the creek, which is really low. You don't want it to come back more than 50% in that range. So it would probably come back to 6 if it does back up all the way. And you wouldn't want to see it go below that. And even then, they're kind of scary because it's like it could be a UTAD moment where it comes back up to the top, tries again. I think it's likely it's going to be like a potentially something like that. Hard to say. That doesn't look right though going into April, does it? Nah, timing's off. It's like the reverse. It's like this was popping in April 2nd. It doesn't seem as likely. That's what a UTAD would look like. If it comes up earlier than that, like let's say it runs up again here, breaks out, it could be like a shallow UTAD. You just don't want to see it lose again this trend going into April. I don't know. There's like a high risk here to... There's a lot of things that could happen. It's high risk because it's not really doing a good job closing above that top, holding it. It really looks very distributive just on the nature of it. And again, if it comes back down, it's going to be not pretty. Yeah, it's going to be down to like $1. That'd be really ugly. That's just where it would go. It looks like the same thing, doesn't it? This looks like a smaller iteration of the bigger picture. See how it made like a double cat ear, but then made it like a higher low and then pushed? It's really similar. And the 50% here, roughly, is in that zone, which means that's probably a 618 retracement. Bet it is. Yep. Still, $2 to $1.41. That's pretty low. Okay, well, I don't know. I mean, if it doesn't go there, it doesn't go there. But I guess if it does go there, I'd want to buy it. Like, might as well just put an alert there. I mean, if it doesn't break down here, it's just gonna run anyways. But if it does, then might as well be on the in the know about it. It's just the natural place to come back to, I guess. All right, that was easy. That was easier than I thought it would be. It's super overblown. I'm sure on the smaller time frame it doesn't look so bad. Probably looks a lot better. Like, oh, they could still run. Maybe. I mean, if it holds above, like I was saying, it could. If there's an SOS, what would happen? I'm thinking that this is going to do the exact same thing it did here because it's already shrunk once. I feel like it's going to do it again. So I think it's gonna do the same thing. Like it's gonna develop a little M cross and then pump back to the top. Because it's already done the iteration once. I feel like it's gonna do it twice. This actually makes a lot of sense. So I think we're gonna see it go up again. I don't care if it's proportionally a little off. Did you get the idea? So it might be a good trade from here up to like 10. Might get $2 out of it. I mean, that's a 30% move. I bet it's going to go up again. But I got to say, like, it doesn't look particularly bullish after that. To me, anyways. It looks like it would be pretty bearish, actually. Because I would think that that's a rejection of the highest order. Like, we're just kind of exhausting a sell-off technique. So let me just quietly finish this and then we'll move on. What is this nonsense? Get rid of that. It's not helping me. Can't see what I'm doing. Yeah. I wonder if this is going to be one of those like last minute things or just like pumps all of a sudden. I would think it's going to be like this. It's going to like come up and then settle high and then rocket. I don't know if it's at a low yet, but it will come up. I guess we could do one more. It's a good swing trade if you want to take it. If you see this happen. Come up. Maybe one more drop. I don't know why you wouldn't come down and check that level. But I don't know. We'll see. Comes up, breaks out. Auto reaction. Double tops here. Little cat ear thing. And then it pops. Going into Friday to Monday. Friday the 28th to Monday. And then it probably does the same thing again here, but at really small scale. If it doesn't break out, it would do a similar motion here, but like really tiny. It might not even be very recognizable, to be honest. And then dumps, like hardcore. If it doesn't break out. And then it's really bad because every single one of those drops is going to expand out. So first it would come down to, this creek, and then probably like retest right here, so on and so forth. Well, we might be able to do it. Let's try it. So if it iterated, you'd have a push here, another push here, you break out and go up. And then if it doesn't work, this is going to be the first hook, because it's going to hook over this line, which is this uptrend. Then the second hook would be over the next one up, which is way down here. That makes sense. Right in that pocket right there. This should triangulate it. Going into April. Start sliding down. Oof, this would be like the worst sell-off. And then the next one would be way back to like here. So it iterates again. Assuming that it's not just gonna be okay. I don't think it will be. I think it's gonna be like a widening or something. Start seeing like a widening spread here. That makes sense. And then, yeah, the ending would be over here somewhere. Gets you ready for June. Maybe a little sooner than that, but we'll see. I guess it could be as early as May. I guess if it makes a move, it doesn't matter. I don't like the idea of everything going up all at once, but maybe that's what happens. This sends you back up to the top where the widening starts. Anywho. Last one. Sorry I had to wait all day. GME's up quite a bit. It's up 4.6% today. Looks like it's going to follow through on that promise, maybe to get to 25. That was the curve I drew, but I don't know, I'm not married to it. I just kind of think it's probable it's going to hit like 25, 50. I wonder. This is going to be a big upset day for bears. Pretty massively oversold. I'm going to go to like the weekly is a big chart. Yikes. You said you're already in it? I mean, I don't usually put a lot of stock into these kind of midway points or these weird like drop points, but in this case, I think you kind of have to. You kind of have to take it seriously, like that's a possibility. Whatever that is. The other possibility is that's more of like a midway, and it did act as one, but then it dumped from it. See that? I don't know, man. This doesn't look great to me. This is your main arc, your main trend, I should say. It might be a little less dramatic than that, but somewhere around there. No, I'm gonna bring it up a bit. I'm not gonna nail it perfectly, so it's gonna be a little off. But it looks sour to me. It does not look good. It's probably pretty close to an early bottom reaction though. Like this looks about right to me. So I'm thinking maybe around like 50 cents is probably the goal here, which usually is a normal kind of number. It just depends on when it gets there. I know when I do this, it's going to make it look weird, but all right, well, the indicators are overblown, so we don't need to focus too much on those. I will make them a little smaller here. The big one would be this guy. I think this is going to be the big creek. And then there's no divergence. This is like a falling cat ear. So you can see one paw, and then you see ear. And so that's going to be your wave right there. Remember, it's always support and then resistance. So there's a support on the first ear and then resistance on the second. So that's kind of the one of the markers I might use right there. It's just the wave down directionally. Yeah, it seems consistent. Trying to like get it right. Okay, and then we got to use, and I'm drawing a lot of lines here. We got to use this. This is like the creek outstanding. The wider one, I should say. This is just like wave cross. It's kind of in the middle. This is really more of like a creek because it's the upper resistance. That's pretty far. And then it gets pretty narrow. I don't know. I don't know what to make of this kind of stuff. Like it already had a reaction here. Like it already popped up and out. It didn't break above the top. One of the easiest ways maybe to trade this would be if it trades above 89 cents, you could have a good trade, or like 90 cents, breaks above that. But if the goal is to keep it under $1, which it sort of looks like, then there's a number of ways to do that. I mean, you can kind of perpetually keep the price low by just generating space, like with drops. Man, there's just a lot here. Penny stocks like this, where they do this kind of stuff, is really difficult to gauge. But yeah, I think if you saw it break back out above 90 cent, you might. I mean, not really a great play back up to $1. You were kind of risk on right now, just making higher lows. But notice that it dipped beneath the first two lows already, and the volume dropped off on that second pump. So I don't know. It closes here. You could see it break back out. and then try to head towards $1. About the only thing I can give you for a short-term play. But if the failure to break happens and it drops here, I think it's just going to go slump pretty low. I mean, I would think it would try to get down to like near 50. And what we'd have to look at is the bottom of the trend. So we're looking right here as this kind of extremity. There's another trend here, which is this lower one, which is the bottom of it. And that could be a very telling indication of like ultimate direction here. What you're going to do is see if I can find like a 50 and then find a 100. I think that's about right. So that's where I'd be like most concerned about it's hard for me to get this quite right. Kind of like that. So yeah, I think there's a possibility here. I mean, it's always a possibility to come way, way up. And this happened on your other one too, where I said, I don't know if it's going to go, and then it just kind of broke out and went. And if it breaks out and just goes, then I don't see why we may not get like a 50% retracement here. That looks about right, that level. You could see $1.80. So you'd have a break here, you'd have to see a break here, and then you would just like go up like that. I don't think it'd be that particular way, but it'd be those levels. And then if it doesn't, I don't see why you don't hit the low first and then kind of chop down bottom. Maybe there you can get back to $1 and or the other. None of this really adds up to like a huge run. And then this would be of concern too. Yeah. Kind of chopping along a new imaginary path as well. I say imaginary because it just really hasn't been super well defined. This is just a channel within a channel traversing here. So we're already on the bottom. I mean, it makes sense. All right, so that might be where that wick came from. So yeah, I don't know. I think if it can get above 90 cents, there's a good chance it could ride up to 148. And then maybe $1.80. I think we had it kind of in the right spot. Maybe. But it's a dangerous one because of I guess there's just a lot of uncertainty in this setup. I'm not a big fan of the pharmaceuticals. I think they're hard to read. Especially when they have massive drops, so. Right. So anywho, if this closes above here, I think it could be potentially pretty bullish. Because this would be like a weakness on the other part. Does that make sense? Like if we inverted this chart and this were to be like a head fake, you'd be like, oh, that doesn't look good. It looks bearish. Yeah. If you flip it over, right? So that could be a very good signal if it holds, especially if it closes like down here or something. They may just erupt and go the other way Monday. Not bad. All right. it's time for me to get off. I appreciate you guys hanging out, and yeah, and we'll talk to y'all on maybe on Monday or Tuesday. Okay. And best of luck today. I mean, we never know. We might get something crazy. It's been an interesting morning. So you see evidence of that turnaround. It's starting to try. Maybe it'll go. That would be wild. All right. Y'all have a good one. Talk to you later.